Good morning, everybody. It is January 12th, 8:47 a.m. Today is Friday. And I don't know about you guys, but this week to me has been very, very slow. I feel like it has taken a long time to get here on Friday, longer than usual than it takes to get here on Friday. But we are here. It is Friday, and we are back with another market open. And we have a lot of news to get into. A lot of things are happening today. Number one, bank earnings are here. We got JP Morgan, we got Wells Fargo, we got Citigroup. I think we also have Bank of America. We have a lot of banks that just reported this morning, and they have a lot of interesting things to definitely say about the state of the U.S. economy. Obviously, the banks are very important. If the financial sector is not doing well, that implicates all of the other sectors. If people want to get a small business loan, if people want to do anything in regards to depositing money, taking money out of their banks, if the banks are in a bad position, then obviously that's going to affect the rest of the economy. So we got a lot to talk about when it comes to bank earnings, and we are officially in earnings seasons. In the next 2 weeks, we'll start to have the tech companies come out, but bank earnings are here. Second of all, we have PPI data. That PPI data is also incredibly interesting. It's way better than the CPI data. Apparently, PPI prices fell 0.1% against expectations, whereas CPI came in higher, which also proves the point that the CPI that we had yesterday was more or less an anomaly, right? Because if the PPI is coming down, what producers are paying for the prices that they charge, eventually the CPI is going to follow suit. And December CPI, more of an anomaly that it didn't really follow a falling PPI, whereas January and February likely will follow a falling PPI. So that is also good, and that's why the market is not necessarily green, but it's definitely not red as we start the pre-market. And then we've got to talk about Palantir. A new article came out today that they are supplying Israel with defense technology. Now, I know we talked about how they were supplying Israel in some of the technology back in, what was it? Back a couple days ago, we said Israel, they were working with Israel. But today we have a very specific piece of news in terms of what technology they're supplying, why they're supplying that technology. And this was reported by Bloomberg this morning, and we have actual quotes from Alex Karp. So we're going to be talking about that and going into all of that good stuff. All right, let's get it in the market open. Darkstar, KC, Just Jeff, El Toro, Marcus. Partnership with IDF announced. Yep, there you go. We're going to be talking about that. I Show Sad, Jocelyn, Mr. Seymour Duck, Sethy Roth, Midwest, Gerald, Valero, Colorblind Collector, Hector, Mark, Benny, Miguel, Midwest, Joseph, Gift Magic, Ty Gordon, Deefin, Nick Piercy, Jared, Sam Chen, Bike Pimp, Kelly. Thank you for being here. Good morning. Win, June, Dexter, what's up? Dale, Justin, Bryan, Terry K. I'm surprised Palantir is so quick to back Israel. The whole conflict plus history is highly contentious. It is not simple at all. I agree. Very nuanced, not simple. They have made their decision, and I think they have the strategic business reasons for why they've made their decision, but also their moral reasons. And we'll talk about it today in terms of how quick they were and how publicly they were to explicitly announce their support. Mike, Johnny, Mark LeBlanc. All right, Sanjay Tobar, Miami Ren. Let's get into it. We are here for the market open. Cool. So, nice hat. Is it snowing? No, it's not snowing. I just switched it up, and I'm wearing this hat. That's all. That's the only reason. Okay, so let's get into it. I think we'll start off with bank earnings. Bank earnings, I think, is the most important. Let's do that, and then we'll go from there. So JP Morgan, let's start off with them. They have their earnings today. We'll do banks, and then we'll do PPI. JP Morgan, their profit fell about $2.9 billion because of some of the money they had to spend for regional banks. The markets, the shares are down this morning, but the market's not necessarily upset about the reason for why they're down. It's more so a question of why, they had this particular fee that is causing them to be down this morning. So JP Morgan, let's get into it, filed a fourth quarter profit decline after paying a $2.9 billion fee tied to the government seizures of failed regional banks. Earnings per share, $3.04. Market was expecting $3.32. Again, the only reason it came down is because of that $2.9 billion fee. Revenue, $39.94 billion versus $39.78 billion. They are growing 15% year over year in terms of their growth, even though they took 12%, even though they took out a 15% loss, they declined year over year because of that regional banking fee. Now, why do they have to pay $2.9 billion to the regional banks? Remember that last year, the government kind of set up this system that was asking on some of the bigger banks to help the regional banks that were struggling. And the whole idea was that if you could get more of the bigger banks, the Bank of Americas, the JP Morgans of the world, et cetera, to supply some money to put into the regional banks, then maybe we wouldn't have a regional banking crisis. Now, you may be thinking, well, why would JP Morgan want to do that? Because if JP Morgan allows, Truist and Zion and all these other companies to fail, then that's a good thing because those assets will just come to JP Morgan. And while that is true to an extent, if the regionals fail, there's going to be a lot more turmoil in the broader financial ecosystem than just, people taking their money and bringing it to JP Morgan. JP Morgan gets enough people, keeping their money for literally getting zero interest at JP Morgan to not have to worry about, regional banks falling and having all this financial catastrophe. So JP Morgan is up 1.94% of the pre-markets. It makes sense that the only reason they lost profits is because of the fees they had to pay to regional banks. But it looks like I'm going to go deeper into the earnings after the market open. I'm going to open up all their investor relation decks, and I want to go deeper and see their deposits, all that stuff. But I mean, dude, if you put up $40 billion in a quarter, it does not seem like the biggest bank in the world is having that horrible of an earnings. Diamond said the U.S. economy continues to be resilient with consumers still spending and markets currently expect a soft landing. The significant and somewhat unprecedented forces causes us to remain cautious. So Jamie Dimon has never really been on the soft landing, I guess you could call it, train, but he has, he's called for a tornado in the past, but he is understanding that, look, if things are going okay, I'm not going to fight it. And they're going to remain cautious, but they're not necessarily going to remain in a sort of this kind of bearish scenario. Shares of JP Morgan jumped 27% last year, the best showing among big bank peers and outperforming the 5% decline of the KBW bank index. The XLF bank index is also up right now, a little bit in the pre-market. So the banks are starting off the earnings without too much of a hiccup. Let's go to Wells Fargo. Let's do Citigroup and then Wells Fargo. Citigroup posted a $1.8 billion fourth quarter loss after a litany of charges. $1.8 billion fourth quarter loss after booking several large charges to oversee risks. The massive bank announced their impact this week hit quarterly earnings by $4.66 billion or $2 per share. Excluding their impact, earnings would have been 84 cents a share. The revenue was $17.44 billion versus expected $18.74 billion. So if we go to Citigroup stock, their stock is still up in the pre-markets, 1.86%. A lot of these banks that have like some of these performance issues in regards to revenue or profits, they're not necessarily tied to like what's going on in the economy. They're tied to external things that have happened over the past 12 months that they now have to account for on their balance sheets. And so that's actually not that bad, even if it looks bad. And that's why I think the market's overlooking it. Same thing that happened with CPI yesterday as well. Citigroup revenue slipped about 3% in the quarter, though the bank said revenue rose 2% after excluding the impact of divestitures and changes tied to exposure to Argentina. So they would have been up on their revenue if not for this one thing in relationship to Argentina. So that's another reason why their revenue is good. They are the third largest U.S. bank, and they have 240,000 employees. They're the second only to JP Morgan in terms of profitability as well. CEO said her company's performance was very disappointing because of the charges, but said Citigroup had made substantial progress simplifying the bank last year. The markets are giving the banks a lot of grace, to be honest. I mean, they're not looking at headline numbers. They're actually looking at what's happening in the banks and then deciding to make a decision, which is interesting because the markets seem like they're in a position where they can handle some bad stuff that's happening and allowing their shares to not necessarily go to crap just because they have some bad issues. Finally, Wells Fargo posts a higher fourth quarter profit helped by higher interest rates and cost cutting. Wells Fargo, this is a Buffett stock. Warren Buffett has a lot of this one. Wells Fargo is down a little bit in the pre-market, so down about 2%. Revenue $20.48 billion versus $20.38 billion. Quote from CEO, as we look forward, our business performance remains sensitive to interest rates and the health of the U.S. economy, but we are confident in the actions we are taking to drive stronger returns this cycle. We are closely monitoring credit cards, and while we see modest deterioration, it remains consistent with our expectations. So not necessarily a credit crunch event or anything that Wells Fargo is seeing. Look at that. Look at their earnings. It was lowered by a $1.9 billion charge from FDIC special assessment tied to the failures of SVB and Signature Bank, and a $969 million charge from severance expenses. Wells Fargo also recorded a $621 million or 17 cents per share tax benefit. So they had a tax benefit, that's $500 million. They had severance charges, that's about $1 billion. And then they had a $2 billion charge from the assessments they were doing with SVB and Signature Bank during March of 2023. a lot of these banks are just now starting to show the losses from all the things they had to do during early 2023. But again, that's not necessarily bearish for the banks writ large. Total revenue, $20.48 billion, 2% increase from the fourth quarter of 2022 when Wells Fargo posted a $20.3 billion revenue that quarter. Net interest income fell about 5% a year ago and warned that figure could come into 7 to 9% lower from the year from $52.4 billion in 2023. The decline in net interest income was due to lower deposit and lower loan balances, but offset by slightly higher interest rates. So we have higher interest rates, which means the money that's coming in, they're making more money on top of that money, which is their net interest income, but they're getting less money to come in because Wells Fargo is not giving you 5% like a Robinhood is or a SoFi is. And so you're seeing less deposits enter into the actual businesses itself. Again, I'm going to be going a little bit more deeper into a lot of these bank earnings and going through their investor relations, but so far, nothing that we haven't expected and definitely nothing that's necessarily bad for markets in the broader ecosystem. So banks are okay. Really, banks are okay. Let me know in the chat if anyone owns these banks. But banks are not in a horrible position at all. I want to look at the regionals in the pre-market. Regionals are up 51.4. Let me look at TFC. TFC is up in the pre-markets as well. XLF is also up. Yeah, banks are fine. I mean, I'm saying that right now on a very elementary level because I got to go way deeper into the earnings, but these numbers are not bad at all, dude. And this is really bullish for tech because if the banks are doing good, there's going to be a lot more momentum in regards to the tech companies having the like freedom by the markets to also not be horrible or to not be treated horrible, even if they don't, do the best in regards to their earnings. I mean, if the financials are good, now if the tech companies are good, then it's going to be really exciting. Let's do PPI real quick, and then we'll get into some of the other stuff we've got going on. PPI also came in pretty good, and it came in way better than the CPI. So here's PPI. December came in at plus 1% year over year, below expectations of plus 1.3%. Month over month, that was yearly. Month over month came in at negative 0.1%, below expectations of positive 0.1%. Markets are green on that. Markets are green or at least flat on that. If we had a higher PPI, markets definitely would have been in a little bit of a precarious position, but PPI is good. For those that don't know what PPI is the producer price index. The PPI is how much people are paying for the goods and services they make. So, we have CPI, how much people are paying for poultry. And then we have PPI, how much is poultry actually costing Burger King and McDonald's and the butchers to actually, make, right? How much does it make? How much does it take to get that cow from that farm into your, McDonald's, into your Burger King? And so if that is coming in lower than expected overall, year over year and month over month, then that means CPI should start to fall down as well, because PPI is, the producers are not going to charge as much if they're not having to pay as much. Some producers are, which is where we have a little inflation issues and little bubbles of the economy. But outside of that, overall inflation should come down. Overall prices should come down. Ray says, now you're making me hungry. I didn't have breakfast this morning. By the way, put in the chat if you had breakfast as well. Put in the chat if you had breakfast. And I want to see what people ate for breakfast. Did you buy Tesla shares amid? Is below 230 like you said? Yes, it's below 230. That doesn't mean I'm buying Tesla. I said I like it under 230. That doesn't mean I want to literally buy it under 230. I'm going to wait. I'm going to wait a little bit. I don't want to DCA necessarily yet. I do like it under 230, but let's see. Let's see there's no rush, in my opinion, to buy. Oh, wow, it's 220. Holy crap. Okay. I didn't know that. I thought it was at 227 as yesterday. I was like, all right, let's whatever. Why is it at 220, dude? Why is it down 3% today? Okay, maybe we might have to buy today. I thought it was still at 228. I was like, oh, it's just barely under 230. It's not that interesting. Dude, what? Why is it down so much today? That's a big deal. Down 3% in the pre-markets. Holy crap. Oh my. Okay, let's transition to Tesla now that we're done with PPI. And yes, put in the chat what you ate for breakfast, because I'm a weirdo and I like knowing what people. If you're part of the channel, you know that I like knowing what people eat for like breakfast, lunch, and dinner. I like ask that randomly, and I used to do it on Finance Junkies every day, and then they got annoyed. They're like, "Why do you want to know?" And I'm like, "I don't know, because I want to know. Like, why don't you want to tell me? Yeah, let me know what you guys had for breakfast below. All right, Tesla. What the heck is going on? $220, and then we got to talk about Bitcoin, obviously, because this damn ETF has not pumped the price yet, so we have to talk about what's going on with Bitcoin. But 227 down to 220, down 2.9%. I'm about to just do some Google searches for Tesla and see if we get anything there. I would imagine the Hertz news definitely is lagging a little bit. Oh, wow. No, forget the Hertz news. We got some more stuff. Yeah, this will do it, folks. Here's the news. Here's the news. Did anyone put it in the chat? Yeah, June, you put it in the chat. Yep, this is what we got. Tesla puts German factory production on hold as Red Sea attacks disrupt supply chains. You know, this is why we covered the Red Sea on the market open. We haven't talked about it in the past 2 days. We also have to talk about it. We haven't talked about it in the past week because it was kind of subdued. Today, probably after the bell, maybe even before the bell, we'll touch on it. The U.S. has launched airstrikes on the Houthis, and this was last night. The UK also consulted with their Western allies, and they basically, their Congress established that it's okay. Their version of Congress said it's okay to launch airstrikes as well. It's getting a little bit serious in the Red Sea. And so obviously it's going to affect companies and their supply chains. Tesla is now putting the German factory production on hold because their global supply chains are not able to do what they need to do, given the literal war that is happening in the Red Sea. I mean, there are little airstrikes happening on the Iran-backed Houthis in the Red Sea. Okay, so let's read a little bit from this. Tesla says it's temporarily halting most production across the German factory because of the Red Sea. The electric vehicle maker said in a statement Thursday night that its factory near Berlin, which makes Model Y vehicles and batteries, will pause from January 29th to February 11th. It's a fresh sign of how the hostilities in the Mideast are disrupting global manufacturing supply chains, with shipping companies reporting that they're being forced to reroute vessels carrying goods and components on the longer route across the southern tip of Africa, or the Horn of Africa. The armed conflicts in the Red Sea and the associated shifts in the transport routes between Europe and Asia via the Cape of Good Hope are also affecting production in Gruyhide, Tesla said. The significant longer transport times create a gap in the supply chains. Tesla said normal operations are expected to resume on February 12th. Wow, that's a month away. The factory in Gruyhide, southeast of Berlin, is Tesla's first in Europe. Holy crap. Dude, that's not good. But that's a great dip. Yeah, look at that, Kelly. That's a great comment. That's out of the control. It doesn't change the thesis. So I like sell-offs like this. I agree. I think today's the day to buy some Tesla. I agree. I think we're going to probably buy some Tesla because this is a dip that's that has nothing to do with them, right? This is a dip that's purely based on external factors. This has nothing to do with demand, nothing to do with, automotive margins. The bot is not taking over the world. This is literally supply chain stuff. Now, granted, the only risk right now, I think, is that if this Red Sea crisis lasts longer than expected, which it's lasting for a month for Tesla, and it's lasted the past couple of weeks. That's why we've covered it, right? The reason we've covered it over the past couple of weeks is because it does have implications. Oil prices are at $75 a barrel right now. Oil was at 68 2 weeks ago, I think. Even a week ago, I think oil was at 68. And now you've got oil prices at 74, 79. Brent crude at 79. Wow, they're up 3%, around 3%, 3.5%, 2.7%, 3%. Wow. Wow. This was interesting, dude. I did not see Tesla. Jesse thinks 217 and then low. Yeah, so if you're going to DCA, I would DCA slightly because this is not a tailwind. This is a headwind that looks like it's not going anywhere. And so there's nothing wrong with DCAing today, but we're definitely going to see some sell-offs on Tesla. I mean, now granted, maybe the dip is so big that people are ready to buy in at 220, and that's fine. But it looks like there's definitely some problems going on with Tesla. And that's going to give us some buying opportunities. Wow, dude. Under 200 would get fun because in 2024, it doesn't what's really interesting as well about Tesla? It doesn't look like Tesla affects any of the other stocks. So if you go to the Mag 7, right? All of them are green outside of NVIDIA. NVIDIA's barely red, right? Because it ran 12% this week, and Apple is also down 0.01%. Apple is barely red. Everyone's green except Tesla. Tesla's showing to not have an impact with their stock against the other stocks, whereas Apple, for example, has an impact. When Apple falls, the rest of these guys fall. Tesla doesn't. Tesla's starting to be on their own isolated island, not really showing that much of an impact, even on the S&P, right? If Apple falls, the S&P falls. If Tesla falls, the S&P is like, oh, we forgot you were even part of us. You're just in that little corner over there, just being you. Like the market doesn't care. So it could keep going, and market could keep going up while Tesla goes down. And for long-term shareholders, I think that is the dip that a lot of us have been looking for. Tesla going under 100. Okay, I don't think that's happening. I don't think 100. 100 is a little bit too much. 200 could definitely happen. It's only $20 away from 200, dude. You have one bad day. There you go. You are now under 200, and it is happening. Abhishek says Tesla and 150. I mean, that's Chris's target. I don't know if we get there. Even under 200, I think 180 is kind of like the place where the bleeding stops, but who knows? Tesla at 150 is like Bitcoin 10,000. It's not happening. Well, speaking of Bitcoin, let's talk a little bit about Bitcoin. So we did not get the pump that we were hoping for on Bitcoin. And maybe that pump is coming eventually. I'm bullish that it will come eventually. But we have not gotten a pump. Bitcoin at 45,767. It basically fell yesterday all the way from 49,000 when it got there. There was not enough momentum to keep it going higher. All the Bitcoin miners are down in the pre-market. Bitfarms is down. Even Robinhood is down. Robinhood 1166. Hut 8 mining is down. Marathon is down. CleanSpark is down. Ethereum is somehow up 2.89%. Bitcoin is down. So like the long Ethereum short Bitcoin trade in the past 2 days has not worked out too badly. But I don't know. I don't even know how to really explain it. The ETF funds are going to be coming in. There was about $4.1 billion of volume on the ETFs yesterday. Grayscale had the largest, but most of Grayscale's volume, if you looked at it, was selling. And so there wasn't really any sustained volume. Douglas says, what do you mean we didn't get a pump? We what happened to 46,100, 46,200, 46,300, 46,400? Yeah, but then it all got sold off. And so, you know, to me, like the reason, my thing is, the thing we heard from a lot of the sort of crypto analysts is that we're going to get a God candle to 50. That didn't happen. I mean, we got there for like 10 seconds and then it just sold off, right? So it really wasn't some sustained, beautiful Bitcoin pump. Now, look, maybe that's going to happen. We still have a long time in the year. We have the halving event, all that stuff. But as of yesterday, the ETF thing, it was a sell the news. I mean, we got to be honest about it. It was absolutely a sell the news. And no Bitcoin bull can say that it was not a sell the news so far. So far, it was absolutely sell the news. The ETF news happened, we pumped, and it sold off. I mean, I don't know how else to, you know, quantify that, but it was a sell the news. And it's okay. It's okay that it's a sell the news, but it was a sell the news. So it is what it is, and we just have to see now until it goes from there. We're up 70% in 3 months. Yeah, and look, that's my point. I'm not saying that Bitcoin hasn't done well. What I am saying is that most people said that the 70% rally we had in 3 months was not priced in. That is what I'm saying right now, right? A lot of people's, the fact that we sold off kind of shows the 70% rally we had was the pump before the ETF, which makes a lot of sense. You know, it's like before stock gets into the S&P 500, you pump. It makes a lot of sense. You pump before, but the crypto people, the argument was no. That was barely anything. We still have a lot more room to run, and maybe that will happen. But as of yesterday, that didn't happen. Okay, and that's okay. That's like it is what it is. It happens with stocks all the time. Like things happen. We still have a long year. It's only January 12th, right? One day after the ETFs. So it'll be really interesting to see what's the momentum on the ETFs now, right? Like if the ETFs, go a lot higher, or how they act. What does that mean for Bitcoin? ARKB down about 1.05% in the pre-markets. Obviously, if you're long Bitcoin, this doesn't matter, right? The only reason I'm saying this is because we have to acknowledge the elephant in the room. We did not have the pump on Bitcoin that we thought we were going to get. We got it. It lasted for 10 seconds. It was gone, and then it sold off. Will we get it in the future? Maybe. I think we will. I think there's a lot of time. I think there's a lot of catalysts. There's a lot more liquidity into the system. But as of now, we didn't get it, right? And because we didn't get it now, kind of just got to be able to deal with that. It might be a slow, steady climb. It just might be a slow, steady climb. Whales move slowly. That's correct. It might be a slow, steady climb, but as of yesterday, it didn't happen yet. Technically, it hasn't been sell the news because it is at the same price it was before yesterday. Yeah, I guess that's fair. I'll give you that. I mean, it was basically at 46.3. It's at 45.7. It's pretty much the same. $500, not a big deal. So that is fair. Juki says last night didn't feel right without the Finance Junkie stream. Yeah, I'm sorry we didn't do Finance Junkies, guys. We were really tired. I, in particular, was really, really tired last night. I fell asleep very early. And Chris was still recovering from being sick. Vitaly was tired. So this week, for some reason, dude, it's been the slowest week I feel like I've had in a long time. Like every day just felt like yesterday, I could not believe it was only Thursday. I felt like, we had to be done with the week, but it was a pretty slow week. Brian Murphy says everyone must buy Bitcoin. This is not financial advice. All right, we will not take this financial advice. Before we continue, I gotta reference a couple of these because I didn't even see some of these. I want to see some of the stuff you guys had for breakfast. Okay, so Brown Group said he had Tesla shares with no milk. I love it. Steak and eggs. We had French toast. We had cheeseburger, no bun. That's weird. We had oatmeal with blueberries. That's normal. We had steak and bacon. We had eating another broken egg cafe right now, chicken and waffles. Okay, so we had some good breakfast. You guys have some decently good breakfast. We got hash browns. We got very good breakfast. Okay, not bad. Good breakfast. Eggs, rye bread with cheese. There we go. Not bad. Amit, never be afraid to take a day off, my guy. Yeah, I also felt kind of bad taking, I guess not a day off, but the finance junkies off. It's just, dude, I was tired. Like, I don't think I've slept this week. Last night, I took a nap and then I slept again last night. And then I just kept sleeping. Like even today, I woke up at like 7:30 instead of my usual 4 a.m. Like, I slept last night, dude. Like, I legitimately just slept. And I think it's because this whole week I haven't slept. So we got some good sleep in yesterday. Now we're back ready to go. Okay. You ignored mine. I did not see yours, Kelly. What did you have for breakfast? I did not see it. Was it a funny one or just you had to have a funny comment, not a regular one, because you don't eat breakfast. I know you barely eat breakfast. Okay. Let's play a clip right here on what's going on with the Bitcoin action and market action in general. And then we'll move on to some other stuff. Actually, no, we should do the Palantir stuff. We should do Palantir. Yeah, let's do Palantir. Let's do Palantir. Okay. So Palantir apparently announced an official partnership with the IDF. Okay. This is really interesting stuff that they announced this morning. Apparently, they were ready to do a lot of press releases because that's all we got from them this week. We had a press release yesterday. We had a press release the day before. We have their Times of Israel covering what they're doing in the region. And now we got a new Bloomberg article. So let's look at this because this is news that just came out this morning. Okay. So here we go. This is what we've got on Palantir. Kelly says she had the blood of my enemies for breakfast. That right there is a woman that's going to take over the world. That's you don't mess with you don't mess with that type of one. The blood of my enemies. All right. So Palantir has agreed to a strategic partnership with the Israeli Defense Ministry to supply technology to help the country's war effort. Boom. IDF partnership. The agreement followed a Thursday meeting between Israeli defense officials and Palantir co-founders Peter Thiel and Alex Karp in Tel Aviv, according to Executive Vice President Josh Harris, who was also in attendance. Both parties have mutually agreed to harness Palantir's advanced technology in support of war-related missions. Harris told Bloomberg on Friday the strategic partnership aims to significantly aid the Israeli Ministry of Defense in addressing the current situation in Israel. No further details on the agreement were disclosed, including what technology will be provided for. AIP was announced last year. Karp, in an interview with Bloomberg on Wednesday, said the Denver-based company's products were in great demand in Israel since its war with Hamas began on October 7th. Palantir had a board meeting in Tel Aviv for the first time this week in solidarity with Israel. Look at that. There's Karp and Thiel. Another picture with Karp and Thiel. One of the second pictures we've seen in a while with Karp and Thiel. Wow. This is Karp and Thiel together. Thiel's looking like he lost some weight, dude. Thiel's looking pretty skinny. And there's Karp just looking normal. Huh. So this comes after the news that Palantir was in Tel Aviv at a university, and Karp was with Thiel speaking about a lot of things. An official partnership with the IDF is very interesting because apparently right after the war, the article is saying that the company's products were in great demand since the Israeli war after the Hamas attacks happened in October 7th. Both parties have mutually agreed to harness Palantir's advanced technology in support of the war-related missions. Israel's defense budget is $25 billion. Obviously, it is much lower than the United States, $887 billion, but it is much greater than a lot of the other Western countries that exist. The strategic partnership aims to significantly aid the Israeli Ministry of Defense in addressing the current situation in Israel. I would imagine that's something like Foundry or AIP, or obviously more importantly, Gotham, that's being utilized for a host of different things in Israel. Just general intelligence is happening across the country. Benny says people are underestimating how many partnerships they're getting because they're not getting paid yet. Yeah, I would agree. Look, this is really interesting. I think the partnership with the IDF, we all knew it was going to happen. It's not like we didn't know it was going to happen. By Monday, we basically had confirmation by Bloomberg when Karp said our products are in great demand and that we've been supplying the Israeli government with a lot of stuff. Today, with getting an IDF partnership, that is much more official in my eyes in terms of what Palantir is actually doing in regards to supplying the government with particular defense technology software that's going to be utilized in a variety of ways. Sham was on the site where the hostages were kidnapped yesterday. Yeah, let me pull that up. I saw that as well. And Sham had some comments on that. It seems like they have gone on a full embrace for Israel, and they're pretty unapologetic about this. Here's Sham yesterday on a site where it was a kibbutz where people were kidnapped and obviously killed. And he's there. And, he said there are no words to really describe this. I think that Palantir has pretty much made the strategic decision of who they're going to support publicly and within a business sense. Palantir right now, 1662, down about 0.39 cents, 0.39% of the pre-market. Look, a lot of people have said it is very controversial for Palantir to be able to do this. And they're going to be losing some business from this. There might be some business that is lost from this. As a shareholder, you kind of have to reconcile the fact that Palantir has decided this is what's not only best for their interests in regards to their moral philosophy around protecting Western values. You can agree or disagree with that, but that's the decision they made. And this is also probably the best interest for their business decisions. At the end of the day, they're going to be making money off of this. And because they're making money off of this, this is how they want to react. Now, the money they're making off this in terms of money from the IDF, is that going to offset the money they're going to be losing from potential clients that they would have been got in that they're not getting because of their support of Israel? I don't know. We will find out over the next 15 months what's happening there. But that is the strategic decision that Palantir has made at the end of the day. If you're Israeli, you're likely going to be you're going to lean more into a Palantir, company that is openly supporting you. Yeah. And look, Palantir has been working with Israel since 2014. So it's not like this is new to them. It's not like they've made the decision out of nowhere. It's like, oh, Israel has money, we're going to support Israel. It's like, no, they've been in Israel for they have an office in Tel Aviv, right? They've supported Israel for a lot. They don't have an office in Gaza, right? So I think their choice was pretty obvious what they were going to do. The question now just becomes, are they going to actually be effective in terms of eliminating Hamas, which is Israel's strategic objective? And are they going to be able to withstand the pushback they're going to get from the entire international community around the Israeli government's basically strategy to eliminate Hamas? And there is a lot that's going to be unveiled over the next couple months in regards to how Palantir ultimately acts and how the market reacts to them as well. SOCOM Paradigm says, love this decision. Israel will likely repay the support. I think Israel's already paying. Israel's not Ukraine. Ukraine really had very little money and not as much of an established infrastructure to do defense technology. Israel has some of the best defense technology in the world, right? I mean, they've like, people argue their CIA is better than our CIA, which is why it was so surprising that the Hamas attack ended up happening. But I think they have the money and they have the technical expertise to know what's happening in defense tech, and that's why they chose a company like Palantir at the end of the day, because they were not going to go with someone who didn't know what they were doing. So that is the news on Palantir, and that is the decision that they have made. My personal opinions, look, at the end of the day, I think Palantir is doing what they said is part of their mission. I think any business that we don't get from Middle Eastern companies, we will get from Israeli companies or companies that are positive on what's going on with Israel. I also think this is incredibly important for NATO. If we backed away from Israel, I think a lot of democratic Western allies would have been like, we can't trust you as a company that chooses to not supply your technology to one of the worst terrorist attacks that has happened since 9/11. And so Palantir made the decision, and they're doing what they're doing. Karp also, people forget, Karp is Jewish, and he has a very special place in his heart, not only for the Jewish people, obviously, but for Israel. And so that's one thing you can't ignore. I mean, at the end of the day, if the CEO of a company is Jewish and he has an affinity for his people, and in Israel, he's been traveling to Israel for the past 35 years, he's obviously not going to take the side of the group that says all Jewish people deserve to die. That's not going to happen. And on the Bloomberg interview 2 days ago, he said there are some employees in the company that internally disagree with our decision. They are free to leave, was his quote. He basically said the door is over there. So he's unapologetic about it, and he really does not care that people may feel a little bit differently about his decision. And that is what we got with Palantir. Brian says, admit there are a lot of YouTube videos during valuation analysis on Palantir with consensus EPS estimates for the year ahead. The estimated EPS for 2024 is 29 cents. How do they get this figure? I'm going to do my breakdown of Palantir's full year and evaluation and EPS estimates for Q4 probably in the next 2 weeks. Okay, so that's going to come out right before earnings. Earnings is going to be February 16th, most likely. So I'll let you know. In terms of how they got their estimates, I have no idea. The 29 cents sounds about right, in my opinion. So I'm imagining they're assuming, probably with that estimate, they're assuming somewhere close to 22% year-over-year growth and probably close to 1,100 customers on AIP. We're at 453 by the end of the year. So those are the baseline assumptions I'm assuming they're putting into the model, but I'm going to do mine over the next couple of weeks and really have a good comprehensive video on that as well. Let's hear Dan Ives and what he has to say on Hertz and the Tesla news, the Hertz news, and the Germany factory stuff. Both really, really not the best pieces of news for Tesla and likely creating a dip that might be juicy enough to buy.
Big news today from Hertz. After betting big on Tesla, Hertz shocking everyone by saying it is going to sell 20,000 of its EV rental fleet. Most of them are Teslas, and go back to gas-powered cars. Hertz said that customers' demand simply is not there, and high repair costs also a reason to sell the cars. Remember that EVs can often have far higher repair costs than others. The question, though, for investors is whether this fire sale will hurt Tesla at all, because Hertz is selling many of the cars for around $20,000. That could also expose fewer customers to the car because it's not available to rent. Tesla stock fell today. It's now on a pretty bad losing streak, at least for Tesla, now down 13% over 3 months. Longtime Tesla bull and Wedbush Managing Director Dan Ives with us. Dan, welcome. What is your take on this news?
It's a black eye for Hertz. I think they clearly miscalculated in terms of the way this was going to, ultimately play out. But I don't view it as much of a negative for Tesla. I think the way Hertz went about it, from the marketing of the vehicle to the distribution, was a disaster. And clearly, I think that's what some of the investors right now are digesting.
Yeah, if I rented an EV once, and I know how to work them, but some people don't. They just kind of leave you to not just Hertz. By the way, not just Hertz. They leave you to the wind. You better know what you're doing. Get in the car, and you're like, this is a whole different driving experience. So that point now, are you worried that these 20,000, my guess is high mileage, pretty beaten up Model 3s being flooded onto the market via Hertz, because Hertz does sell cars, people don't realize that, will damage Tesla's near-term sales?
I don't believe so. I mean, if we look at ultimate demand that's happening in the U.S. and even in China, I think they're actually having a bit of a rebound as we go into 2024. I think this is an overreaction. Look, right now, there's a lot of dark clouds from perception perspective when it comes to Tesla. I think they come out flexing the muscles when it comes to guidance, in a few weeks when they guide. This is a black eye moment for Hertz, not for Tesla.
Okay. All right, there you go. Let's move on. I want to switch gears a little bit, because today something pretty interesting happened in the stock market. Apple briefly, and I mean very briefly, passed Apple, Microsoft rather, dethroned Apple as the biggest US and really global company for just about 1 minute. Okay, but of the two, so now they're basically the exact same size.
Yep.
Which one is the better bet?
Look, the AI revolution, it's starting with NVIDIA and the godfather of AI and Jensen, but it's really Redmond. I mean, what Nadella is doing, he's transforming AI, and I believe Microsoft will be a $4 trillion market cap in the next 12 to 15 months. I still believe Apple is the better stock in terms of this year, because I think there's a renaissance of growth happening in Cupertino. But what this really speaks to, the monetization of AI, it's here, this revolution, and it's really starting with Microsoft and what Nadella is doing.
Okay, there you go.
So, one thing about this Hertz news, and then we'll talk about Microsoft real quick, is, and this is really important to understand as well. I tweeted this last night, and I think it's very, very important to understand, which is that Hertz selling off 20,000 of their vehicles does mean that Indians don't like Hertz. And the reason Indians don't like Hertz is because I found a tweet from June 2023, someone that randomly liked it yesterday and said, I'm at an Indian temple right now, and this parking lot is filled with Teslas. When one Patel decides to get a Tesla, all of these people decide to get a Tesla as well. So the Patels like Teslas, which means if Hertz is selling off 20,000 of their Teslas, it means the Patels don't like Hertz, given the transitive property of analysis here. So that's some due diligence on Indian people and Hertz. Nonetheless, it's really weird that Hertz decided to sell off those 20,000 cars, but I don't necessarily blame them, because if you listen to the CEO talk about why they sold off those cars, their argument was that customers don't want EVs. They want gas guzzling vehicles. And so if they want gas guzzling vehicles, it's really hard to justify us giving them something that they don't want. So kind of understand why they sold it off. It does point to maybe EV demand and EV infrastructure not being as sophisticated as it needs to be yet. I don't think it's a Tesla problem, but it is something that the market didn't like. Okay. And that's why this happened. These people, yes, these people, my own people. Yet they're selling Teslas with high mileage. That is also true. Look, it was a really weird thing that Hertz decided to say yesterday. I mean, I don't think anyone expected it. It was just super confusing that that's the news that came out. Tesla now down 3% below 220 at $219 in the pre-market. So we got about 3 minutes to the market open. Going to be really exciting to see how Tesla decides to open up and where a lot of these Bitcoin ETFs go. But again, if you're just joining, the German factory news that came out this morning that Tesla's going to have to delay by a month their German factory production, which is not going to be good for their Q1 production numbers going into 2024. This is going to have a month of delay because Q1 already started. We're 12 days into the quarter. So you're talking about 40 days of delay. And once they get back, it's not like they're going to get up and running immediately on Tesla's numbers. That's also what the market might be pricing in, that if Q1 numbers are not necessarily going to be the best for production, if the Germany factory is down because of the Red Sea conflict, then Tesla's obviously not going to have the best numbers to start. So this is going to be interesting. This is definitely not the best news for Tesla. We got 2 minutes till the market opens, and we're going to see where it happens. Brace for impact. Yeah, let's see. I mean, which part of India are you? I was born in America, but I'm from New Delhi. That's where my parents are from. Patel sounds like enterprise because it sounds like a better business word. It's just an infrastructure problem. It doesn't have anything to do with Hertz or Tesla. I agree. The problem is the market thinks it could definitely have something to do with Hertz and Tesla. So that's what we're seeing right now. German factory production, that's going to be delayed. You've got the Hertz news that's happening right now. Bank earnings were great. So the market should, even though it's a Friday, maybe not sell off as badly as it usually does on Friday. But Tesla, I think, is the story of the market open. Let's see how badly it sells off or how strongly the dip is bought, down about 6% in the past 2 days. That's going to be the market open kind of thesis. Bitcoin trying to rally back up to 46,000. This guy also, let's see if, there's a little bit of a pump as we open the markets and if some of these flows come into ETFs. Now we'll get to see how the ETFs perform as soon as the market opens too. So that'll be really interesting as well. All right, here we go. Thank you all for being here. January 12th, 9:30 a.m. Once again, the stock market is open. Wake your ass up. Here we go. Tesla opens at 220. You're getting a lot of buy orders come in. And a lot of buy orders and sell orders kind of matching each other out. Now at 219, it's down about 3% of the day, but not a super big decline. You would imagine as we open the market, at least in the first 10 seconds, Tesla's at 220, down 3%, similar to where it was at in the pre-markets. And we got Tesla here at 210. We'll go back to it in a second. Let's look at some of the other stuff. ARKB, Bitcoin ETF opens down about 0.56%. So we got Bitcoin ETF opening down red on the day. We got Palantir 1676 up 0.51% of the day. If you're just joining, they signed an official partnership with the IDF in Israel. Palantir is now completely confirmed supplying defense technology to the Israeli Defense Force. And that was confirmed this morning in an article by Bloomberg. Truist, $37.38. KRE, Regional Banking Fund, up for $51.38. Wells Fargo, down about 3% of the day. They had a little bit of not the best earnings, not the worst earnings either, but a lot of the things they are showing that are bad are really from last year. So that'll change over the next couple quarters. S&P, 477.98. There you go, 478. That's we are 7 cents away from 52-week high. We are 7 cents away. We're now 3 cents away from 52-week high on the S&P. Absolutely incredible. 478. This is basically where we were January 2022. And now if we can get to 480 and surpass where we were all time, then maybe psychologically we can move forward from this. But so far, we have been kind of stuck at that 478 level from January 2022 that we worked our way to get back here. We went all the way to 340 and came right back over the course of the past year and a half. Enphase 116, Affirm up 2%, PayPal up 0.85%. Interesting to see that PayPal is actually up right now. QQQ 410, Google 143, Nvidia 545. Nvidia's down, but makes sense that Nvidia's down. Nvidia's rallied massively today, so it makes sense that Nvidia is down. Nothing too crazy on that. Let's see what else we got. Rocket Labs is up $5.19. Meta 370. Ethereum up 3% on the day, looking like it's trying to close in on 2,700 on Ethereum. Absolutely incredible. We got Ethereum is up right now. Oracle $105. SoFi 821. Costco 678. Robinhood, wow, taking a beating. $11.24 on Robinhood, down 4% on the day. Let's look at the Bitcoin stocks. They are red. CleanSpark is under $9, $8.89, down 4%. Coinbase 136. Oh my God. For some context, Coinbase was 167 on Monday. Oh boy, that is red. MicroStrategy is now under the price it needs to be at in order to make sure they don't have to pay back their debt in January 2025. Wow. Talk about a decline. Wow. MicroStrategy needs to be at above $517.93 by January 2025 to make sure their debt is not collateralized, or to make sure that they don't have to pay back the debt, that it just turns into equity and they get to dilute shareholders. And now it's below that. Look, it's not a big deal. I mean, we have a long time until, their debt maturity comes up, but it was at 690 like 3 days ago. Bitfarms is down 8%. Hut 8 Mining down 5%. Marathon down 5%. Riot down 5%. It is an absolute bloodbath in the crypto sphere. Absolute bloodbath today. Oh my. Absolute bloodbath today. Today is nasty for the... Now, granted, that means the dip might end up being bought later throughout the day if people are really excited about it. But this is... this is bad. This is bad. Amit, what do you think about all these Bitcoin related stocks? Do they have any more momentum left in them? I think they have plenty of momentum because the year is not done yet, right? Like we have a full year to go in regards to Bitcoin. The Bitcoin thesis is not done. Obviously, it was a sell the news yesterday, but I don't think the thesis has been broken or it's going anywhere. The halving of it. I think all the reasons we've been bullish on Bitcoin, we are bullish. But in the past 24 hours, there hasn't been a pump. And obviously the markets are reacting to that. Some of these, they're recovering a little bit. Some of these stocks are recovering and they're not down as much as they were before. CleanSpark now down only 4%. Robinhood down only 2.65%. I think this is a great dip for a lot of these. Look, if you were looking to get into some of the miners, I mean, today is a dip to buy. If you're looking to get into Robinhood, today is absolutely a day to buy. If you're looking to get into MicroStrategy, it's down almost $200 in the past 3 days. Today is not the worst day to get in there. But if the trend continues, it would mean that I think Bitcoin in particular would be going down more and more and more. This is more of a sell the news on the ETFs, which is why you're having a derivative effect on the Bitcoin miners. I don't think it's a trend that's going to last throughout the entire year. I could be wrong, and all these miners could go to shit. But at Bitcoin at 45,000, I don't think the miners are going to shit. I think it's just a sell off based on the fact that Bitcoin didn't have a pump yesterday. I think next week Bitcoin will hover around 55,000. Maybe. We will see. Maybe not. It's now it's kind of like we got to see how the ETFs actually perform. Let's go to some of the ETFs as well. Okay, so let's go to some of the ETFs. We got BRR, the Valkyrie Bitcoin ETF, that's down about 1.96%. ARKB down about 1.38%. You got IBIT, the BlackRock one, down about 1.69% at 2620. Vanguard, we had the news that came out yesterday. I don't know if people saw or they were part of the market close yesterday, but Vanguard has decided they are not going to allow access to their investors. They have about $7 trillion under management to buy the Bitcoin ETF. So they came out with a statement and they basically were like, it doesn't philosophically align with our values in regards to long-term investment theses. And because of that, we don't want to give access to our clients to invest in these risky assets. Now, the average Vanguard client, I don't think cares that much about this, right? Because they're a bit older and they don't want to invest in crypto. But yesterday, a lot of people were like, I'm canceling my Vanguard. I'm getting off of it. Do I think it's going to affect Vanguard massively? No, obviously, Vanguard is too big for that to affect them. But Robinhood ended up taking it as an opportunity to do a little bit of a strategic advertisement. Some of these people were like, you know what, we're leaving. This is just dumb. Here's Robinhood's ad last night. As you can see, Vanguard holding the person that's trying to get a hold of Bitcoin ETFs. Robinhood's kind of playing on this fact. And I mean, look, it is kind of silly that Vanguard, this big financial institution, is not allowing their clients basic access to some of these crypto assets. Now, granted, in their defense, they're like, we don't want to deal with the fees. We don't want to deal with the liabilities. We don't want to deal with people losing their money by letting them invest in this stuff. To me, I think it's just kind of dumb. And I think eventually they'll capitulate and they'll allow people to invest in the ETF. But so far, they are not doing it right now. Vanguard doesn't even care. Yeah, Vanguard has too much money for them to care. But as of now, there are definitely a bunch of people that are pretty upset that this decision is happening. Palantir 1692. Look at that. Palantir, nice little pump up 1.14% of the day. Tesla, nice little pump as well. $223 up 1.16%. So this is not a dip that the market is really scared about. This is the dip that the market is buying, particularly because they know that it's not really part of Tesla's. It's not Tesla's fault. The reason Tesla's falling is because of this Red Sea conflict, and that has nothing to do with the company. That has everything to do with macro external events. And so that's why we're seeing the dip get bought on Tesla at 223, down about 1.64%. It was down about 3% on the day. Look at the S&P. The S&P basically just hit a 50. Yeah, the S&P just hit a 52-week high, 478.42. Wow. The S&P is officially higher than it was January 2022. Wow. The S&P is higher January 2022. Vanguard is the number 2 biggest institutional investors in MicroStrategy and invest a lot in Bitcoin-related stocks. Yeah, I mean, look, Vanguard has a lot of parts to them as a company. They have the Vanguard Group. They have the Vanguard investment firm. Like Vanguard and BlackRock own a lot of public companies in the United States because they have to own them for their clients' ETFs, right? Because those are very big ETFs for their clients. But in this context, they're making a strategic decision to maybe invest in some Bitcoin companies like MicroStrategy, but not necessarily offer an entire ETF to their clients. And that ultimately comes down to, how they ideologically think of it. You got Palantir 1693 up 1.51% on the day. Truist 3748, KRE 5144, JP Morgan 174. JP Morgan's up 2.5%. They had a great earnings. They're doing very well, growing 15% year over year in terms of the revenue. Citigroup is up 2%. S&P 478.40, absolutely incredible. The S&P hitting all-time highs. AT&T is up 1.65% of the day. Verizon is up 1.72%. AT&T Verizon fell 3% yesterday because of lead cable news. Wall Street Journal did another piece on how hundreds and hundreds of fiber optic cables have more lead inside of them. And so that was a little bit bearish to the market, but it's recovering. Dips getting bought. Market's not too upset that that's happening, and that's probably going to be resolved. Google at 144, QQQ 410, Nvidia selling off a little bit, but that's okay. Nvidia's up 12% for the week. Ethereum 2600, Meta 372, 52-week highs on Meta now. Mag 7 I think is green. Yeah, Google's green, Meta's green, Microsoft all-time highs. It's apparently they were at 390 today. Now they're at 386, but they hit their all-time highs today. 2.87 trillion. Apple 2.9 trillion, 186. Market's green. Tesla and Nvidia are the only ones that are red, and Nvidia's up this week, so that doesn't matter. Tesla's red today, but Tesla's recovering. Very, very green market we're seeing on a Friday. We're seeing a green market. Celsius is up 2.5%. We did a deep dive on Celsius yesterday, me and Steve. Wasn't that excited necessarily when it came to Celsius when we looked at their numbers. Their numbers are good, and their growth is probably great, but the valuation wasn't that exciting for Celsius. So I'm not a buyer of Celsius. Neither is Steve yet. Maybe we'll do some more due diligence and see what we get. But Monster's market cap is 60 billion. Celsius is 14 billion. So if you're looking for Celsius to double, they've got to take away a little bit from Monster's market cap, or they've got to expand the pie of people that drink energy drinks. And given their brand as a gym energy drink, I personally don't see the massive moat that they have, even if they're going to grow a lot. So if you're looking for a double from Celsius, I think that a lot has to happen. But as of now, the risk to reward on Celsius to me isn't that great. Now, if you're looking at it for the next 5 years, maybe there's a bigger thesis there. But outside of that, Celsius is not the most exciting that I'm seeing right now. But it is interesting. It is definitely interesting. And it is obviously growing massively in this. You guys did a deep dive on a company and didn't even look at the growth. No, the growth is great. Obviously, the growth is phenomenal, right? The growth is incredible. They're growing triple digits in some regions. The growth is awesome. But it's just like for them to take away some of the market share from Monster and some of these other energy drinks, they have to grow even more. I mean, you're paying a very expensive PE for that growth. And if that growth isn't there, then that valuation is not sustainable. You're getting hung up on the gym branding. Yeah, I don't like the gym branding either. That's more of a personal thing from my perspective. I don't like the gym branding of Celsius. They can easily take over Monster. I disagree with that. I don't think they can easily take over Monster. That's the part I disagree with. You can say monsters are shitty for you, but all these energy drinks are shitty for you. You got to remember, all these energy drinks are like none of these energy drinks are good. I don't care what science you give me about Celsius. It's bad. Red Bull is bad. Monster is bad. Like water is good. Okay. The rest of the shit is bad. But they're going to have to do a lot to take away some market share from Monster. And I don't know if I necessarily see that yet, but I got to go deeper into it. Yesterday was kind of the first day diving deep, and we'll go deeper over the next couple of episodes and see from there. I also will not invest in something that's un-American. I agree. And Celsius, given their use of the metric system, is incredibly un-American. So my money would rather go to Palantir than Celsius. Bitcoin ETF is down 1.9% on BlackRock. Valerie, it's down 2.4%. Truist 37.45, KRE 51.27, Palantir 16.93, trying to get that $17 range. Let's go back to the crypto stocks and see how they're doing. Robinhood down 3% of the day. Bitfarms down 6%. MicroStrategy down 5%. Wow, MicroStrategy at 508. Dude, MicroStrategy under $500 would be pretty incredible. Oh my. Bitcoin 45,000. CleanSpark down 7%, $8. Yeah, my cost average on CleanSpark is about 11. So got a little bit of a bag on Clean, but thankfully it wasn't a lot of money. It was $5,000. So it is what it is. It was a gamble of $5,000, and hopefully it comes back, but that one is down $8.58. And you know, it's interesting. Bitcoin is not down that much from when CleanSpark was at 11 or 12, right? It's pretty much at the same price, if not higher. I think Bitcoin's at 43,000 when CleanSpark was at 11. So the sell-off we're seeing is primarily due to the fact, I think, of just the sentiment around the ETF not creating a massive kind of, you know, God candle that pumped Bitcoin to 50,000. Which is not like the worst sell-off in my opinion, because that's a sell-off that's a bit unwarranted, and we're probably gonna have some buyers come back in. But over the next couple of weeks, it'll, you know, see how the thesis ends up playing out. But we are seeing some decline there. Let's go to Tesla. How bad is Tesla? Is Tesla doing okay? Tesla 222. Okay, down 1.86%. So not falling below 220 yet. Dip is not getting worse. For those that are just joining, Hertz news is hurting Tesla, and German factory production is delayed by a month on Tesla because of the Red Sea conflict and the supply chains being affected to get the raw materials to actually be able to make those Teslas in Berlin. So that is why we're seeing the decline on Tesla today. Q1 deliveries or Q1 production is probably not going to be as strong as we want it to be. 478.43 on the S&P, all-time highs on the S&P. So we got all-time highs on the S&P, we got a Tesla dip, and we got Bitcoin falling, and Coinbase at 136. You got a lot of blood in the streets in regards to these Bitcoin stocks while the broader market is doing okay. Do you have a PayPal exit price target? I think 85 is when I start unloading a little bit, because 85 from 60 would be awesome. You know, a lot of people thought PayPal would be 85 or 70, at least $70 by now, and PayPal has really not performed. But I think we got to give them a couple quarters to see how they perform, and then, you know, keep it going from there. Uranium ETF is up 5%. Okay, so we've got commodities that are going higher today as well. We've got a lot of shit. Everything's just all over the place today. Like Palantir being up 1% today, this also makes no sense. I mean, the Israeli news is probably not enough news to really pump it. It's just randomly up today. The banks are up. That makes a lot of sense. Crypto is down. That makes a lot of sense. Enphase is up a little bit. Affirm is up a little bit. Square is up a little bit. Where's AMD? Because NVIDIA is down. AMD is up, even though NVIDIA is down. NVIDIA had a good week. Uber at 52-week highs. Look at that on Uber. 64.31 on Uber. Meet Kevin's ETF is down because Tesla's down, even though he has a lot of NVIDIA. Tesla's down. Meta, new 52-week high, 374. Meta hit a new 52-week high almost every single day this week. Absolutely incredible, dude. Absolutely incredible. KW says, I'm literally drinking Celsius right now before hitting the gym. Yeah, look, dude, I'm not sold on the gym thesis for Celsius. I'm really not. Like, I don't know if that's massive, massive growth. You also got to remember, I think a lot of people are forgetting, Celsius is up 50x since 2019. So if you're looking for another, 2-3x, you got to do that on top of a 50x, which is not the easiest thing in the world. The growth has to not only be better than it was the past 5 years, it has to be massively better. And so far, the gym branding to me is not the most exciting for Celsius. But look, I have to go deeper into it. But as of now, it's not like the coolest thing to bet on an energy drink that's based on the gym, especially when you're competing with kind of the Gatorades and Prime Energies and what else? You have the Powerades of the world. And look, Celsius might be better than all those. I get it. But that is a weird kind of market to be kind of saturated in. Mick, can I get a vodka Celsius? Yeah, like who's asking that? Who's asking for a vodka Celsius, dude? Inbound says, I'm not drinking Celsius crap energy drinks. They're just not it. Yeah, look, and I know a lot of people like it. For me, I'm not seeing it. I'm not seeing it that much. Celsius is good if you have the right flavor. I think I had peach once, and peach was just not good. And so also maybe that's giving me a little bit bias. Maybe I have to try some better flavors. But even if I like the flavors, I don't know how they're overtaking Monster and Energy or taking enough market share, given they 50x'd. So now they actually have to get some market share in order for this, be a little bit better, and then for them to get to the 2 to 3x. Aaron Patel says Celsius Mojito. Yes. Yeah, probably not getting that. All right, we got Gary Gensler on CNBC. Let's hear his thoughts on the official Bitcoin ETF.
Now, first on CNBC, following that decision that some have described as historic, is SEC Chair Gary Gensler. Chair Gensler, we appreciate you being with us. Let me start by asking you this. Do you consider the decision historic? And it appears that it's a decision that you made either reluctantly or perhaps even begrudgingly.
Well, look, Andrew, this has been considered for a long time. As you know, starting under Chair Clayton, we had disapproved a number of these over the years, and something had changed. I'm a deep believer in the rule of law and a respect for the courts, and taking a new court decision into consideration, we move forward. I think this is the most sustainable path forward.
So it appears, though, from what you're saying and reading through the decision as well, that what changed is not necessarily something inherent to crypto or Bitcoin per se, but what changed was what the courts did. Is that the way to think about this?
Well, again, I mean, we do everything here at the Securities and Exchange Commission within the law and within how the courts interpret those laws. And that's what the American people expect, and that's what we do here.
What is your message to investors about Bitcoin now? Because we're going to have all sorts of public investors now potentially have access to Bitcoin in a way that they didn't before. We were just talking to Larry Fink. He said that he got a huge wave of new investors getting into Bitcoin through this ETF. You have still suggested to be cautious about it. And I'm trying to understand how you think about those cross currents in terms of the message you're telling investors.
Well, look, Bitcoin itself, we did not approve, we do not endorse. This is a product called an exchange traded product, a way that investors can invest in that underlying non-security commodity called Bitcoin. But yes, investors, I think, should be aware that the underlying asset is a highly speculative, volatile asset. And amongst its use cases is really for illicit activity, money laundering and sanctions and ransomware and the like. And I've
Bro, he's really sticking with his narrative. He's really keeping with it.
know that you've asked other people over the last few days, is it being used as a store of value? It's a speculative, volatile store of value. Is it being used as a payment anywhere? Are we buying cups of coffee with it? Not really. The only payment mechanism it's being used for in sort of in a primary sense is illicit activity. So I think you've been spot on about that, Andrew.
So just on that note.
Wow. So they approved the ETF, but they are still saying that Bitcoin is horrible. All right, let's hear a little bit more of what he has to say.
Mr. Chairman, this is out, and I'm not going to take either side on the whole thing, and it's kind of funny. But these are, I don't know the exact units, but if you look since 2017, what's been used to launder money, 20,000 is the unit for, 20,000 is the unit for $1. 33 is the unit for Bitcoin. So that's a multiple of I don't know how much for dollars being used for money laundering versus Bitcoin. But now I could see Bitcoin bears saying, really? Well, it's not even good for money laundering. Then it has zero value. I could just see that as another arrow in the quiver for the bear case. But the question I wanted to ask you was this: let's take the continuum. Let's take the rat poison, Beanie Baby, Jamie Dimon, Charlie Munger versus we had yesterday on our Coinbase CEO. Did you hear him make the case for Bitcoin? I mean, it was almost like a symphony to Bitcoin bulls, Chair Gensler. The proof of work, akin to gold. Every monetary aspect we've had for thousands of years is represented perfectly. And Tom Lee, there's never been a mistake on the blockchain out of trillions of transactions. You understand it. You taught at MIT. Which is it? Is it a Beanie Baby in your view, or is it something that has inherent value that's going to be part of the financial system decades from now? Which is it?
Look, no doubt there are innovations within this field, and those innovations, which I taught about at MIT around a ledger system. It's just an accounting system called the blockchain technology. But there's an irony in the midst of this. Satoshi Nakamoto said this was going to be a decentralized system. And finance, this has led to centralization. Think about the irony of those who say this week is historic. This was about centralization and traditional means of finance that investors who could already express themselves in Bitcoin, you could already, before this week, buy it through major brokerage houses. But now you can buy it through this thing called an exchange-traded product.
But the underlying asset still has
centralized.
The underlying asset still has the decentralized, distributed ledger, all those characters. That sounds like I don't know. That sounds like
no, Andrew. With all respect, there's a lot of centralization here, and even the underlying ledger. Largely, the Bitcoin's produced by a handful of mining companies and the like. And so I'm just saying.
Shout out to the miners. Shout out to CleanSpark.
Now, in terms of monetary history, we have a dollar, we have a yen, we have a euro, we have the renminbi, and there's a reason for it because we do have a common economy that relies on those currencies.
Chair Gensler, let me ask you this, though. Is there a possibility, despite the fact that this has been now approved, that this spot ETF has been approved, that you could see a day where Bitcoin itself in some way would be outlawed? I ask because if you recall, and now there's a lawsuit taking place between Coinbase and the SEC. They went public and they've now made, you've come back and said there are certain unregistered securities and the like that are on their platform. They say, well, if you approved us the first time, how can you come back and say that this is not kosher? And so I think there is this other question about, and I know you're not endorsing Bitcoin, does that still open up the possibility that Bitcoin could somehow come under fire from the SEC or some other agency?
Look, let me talk about this field more broadly, and the American public is aware of this. It's rife with conflicts. It's rife with fraud and abuse without prejudging any one token. Many of these tokens, I would suggest a majority of these tokens are actually securities under the securities law. And so the platforms, the various places that you might buy or sell these crypto security tokens need to come into compliance with the federal laws.
What did you make of what Elizabeth Warren, who was a very supportive?
Okay, so I don't think they asked about the Twitter hack. Yeah, we got a minute left, and all they're doing is talking about Elizabeth Warren. That's incredible that he didn't ask about the Twitter hack. I guess they were instructed to not ask about the Twitter hack. In general, look, Gary Gensler did not want to approve this ETF, but his hands were tied because the courts basically were like, look, if you don't approve this ETF, you're going to get sued. I mean, like, there is not a legal argument you can make, a real legal argument for not allowing investors to have exposure to this asset class. And that's also the beauty of, the United States, is that at the end of the day, a lot of times it's the individual's decision for what they want to invest and not invest in, as much as The government wants to help protect you. The individual gets to make the decision. And so at some point, after 10 years of the asset class becoming really legitimized in regards of not just return, but also all the use cases that exist for it, the SEC can't really deny it at that point. So Gensler thinks it's volatile, thinks it's used by criminals, doesn't like the asset, his own personal opinion, but did approve it. And still believes that the asset is highly speculative and volatile. Some of the points he was making around centralization are not the worst. I mean, I know a lot of people agree with the fact that the decentralized nature of Bitcoin has become centralized to an extent. But in general, he is pretty bearish on the entire concept of crypto. And but the ETF has to still be approved, regardless if he's bearish on that for the long term. Let's take one more look at stocks and see what we've got going on. QQQ 410, Bitcoin 45,500. The Bitcoin miners are the Mag 7 is all green outside of Tesla. Tesla's at now 225, recovering a little bit. Bitcoin miners recovering a little bit. They're down, but not as down as they were before. MicroStrategy was about to go under 500. Now it's at 523. Robinhood at 1144. CleanSpark almost $9. It was at 850. Coinbase at 140. It was at 134. So crypto stocks are recovering. The dip has definitely gotten bought. It's not like they're green yet, but they were severely red as soon as the market opened, and now they're getting bought up. Again, a lot of people seeing that this is a dip they want to buy. Ethereum up 4% on the day, 2,700, absolutely outpacing Bitcoin in terms of at least the past day-to-day performance in the past Wednesday, Thursday, Friday run up that we've seen. Bitcoin obviously would be better if it was at 49,000, but it has sold off to about the 45,000 range. And S&P 500, and along with the Mag 7, they're all green. The only one that's red is Tesla, and Tesla's not as red as it was as the market opened. This is absolutely incredible. Microsoft at 385, Meta at 375. Really, really good market on a Friday. You don't expect to see this on a Friday, but you got a hell of a market on a Friday. And next week, we'll see where it goes from here. Monday, the market will not be open. We have Martin Luther King Day, so we won't have a market open. But Tuesday, we will see where the market continues to go from there. All right. Not bad at all. And this is what we've got on the market open. Now, I've got to do a little bit of an announcement. I told you guys I was going to do an announcement at the beginning of the week, and I was going to do it at the end of Friday's market open. So I'm going to get through my announcement. My announcement is pretty long. I mean, I'll be here for like the next 20, 25 minutes explaining my announcement. And then you guys, I'm sure, have questions in the chat. So we'll do questions on this as well. Also, the announcement I'm going to make, we're probably going to do an entire Finance Junkies podcast on it on Sunday night, 9 p.m.-ish. So we'll be talking the entire day from there. Let me just pull this one thing up, and then we will go from there. By the way, Chamath also had a really interesting tweet yesterday. We didn't get to talk about it, but Chamath basically had a tweet that said, he said, if you have any enterprise SaaS software, I'm starting a new incubator where me and my team will build it for you overseas. It was honestly the most hilarious thing ever. He got a lot of shit for that, but it's actually not the worst idea. So, that's, we'll probably talk about that on Finance Junkies as well. Okay, cool. So any Finance Junkies on Sunday? Yeah, 9 p.m. on Sunday. All right, so my announcement. This is a big deal in my life, big decision for me. A lot of people have been asking for this, and so it's time that I make the decision. Very public thing in my life, so ultimately I have to tell you guys as well what's going on. I have made the decision, my co-founder and myself, to shut down our startup Audia. Over the past 2 weeks, we have come to that decision. Now, this is a pretty tough decision that we came to, and I have a lot of logic to explain for that decision and explain why we ultimately made that decision. Finance Junkies on Sunday, we're going to be talking about this for a long time as well. And so over the next 20 minutes, I'm going to go through my logic. I want to answer everyone's questions that you guys have and come to the conclusion. Before I get into Mary and Kelly, that's the decision you thought it was going to be. Before I get into it, I just want to say a couple of things, and then we'll go deeper from there. For those that don't know that I have a startup, if you're new to the channel, I have a startup, and we raised money for it in July of 2022. We raised about $330,000 for that startup. A lot of you have kept up with the channel and have known about my journey with the startup. It's in the back right there, audia.io. Some of you are just brand new to the channel. You discovered me like last month, and you have no idea that I even had a startup as well. So I want to explain it to both sides that have it or don't have it, and then keep going from there. First of all, let me make one thing clear. We raised about 330. We have 50% left of the capital, and we are returning 50% of the money back to investors. So one of the big things that was important for me is that once we came to the conclusion that, yeah, this is not going to work. And I'm going to talk about how we came to that conclusion. The most important thing for me was, how do we protect enough of the capital that is left? And given the capital that was left, we are giving it back to investors. So investors are going to be getting 50% of their investment back. I have never taken a salary from Audia. My co-founder has never taken a salary. The money we spent was primarily on development expenses, talent expenses, and for a short amount of time, we had office expenses. So those three were our core expenses over the past 2 years. And that's why we have, most startups don't have 50% of their capital left after a couple of years of running this thing. But one of the most important things was to actually give that money back to investors and be able to at least, save some of their investment. I have informed all of our investors on this. So this is not the first time they're hearing this. They heard about this last week. And, quite frankly, the response we got from the investors was, I just couldn't ask for a better group of investors. Pretty much every single investor was like, you really tried to do this thing. This was one of those things that was not the easiest thing to do in the world. I'm going to explain why we ultimately ended up failing, but a lot of them kind of knew this was a lotto ticket in terms of the ambition that we had, the thing that we were going after, and how difficult it was. And what was really humbling when I messaged, most of the investors all individually and told them what happened. The really humbling part of this was all of them said, let me know, what your next startup is, because I want to be part of that as well. And that to me was just, it was a testament to the people that we had on our cap table that were incredibly supportive and grateful, but it was also a testament to the belief that they had in me. And although this one didn't work out, literally every single one of them that I gave the news to, and I sent a very long message to all of them, personalized message. All of them were like, hey, it sucks, but let us know what the next one is, because we want to take a bet on you. So it was just really, really grateful for the investing group that we had, for the investors that were here, and for the people that ultimately gave us a chance and try to do it. J. Cal shakes fist in the air. All right, so let me explain kind of how we came to the decision, what this ended up, how this ended up happening, and what the future is from here. For those that don't know what Audia is, the decision or the thesis around the company was pretty simple. We want it to become what YouTube has done for video for audio. And what I mean by that is the search, discovery, monetization, and ultimately recommendation engine that is allowing people to find content. So for example, these 753 people to see, who I am right now and be into the stream, this is because of an algorithm that connected you with your content. I believed 2 years ago, and I still believe, that algorithmic discovery of content is one of the biggest opportunities in the world, because it gives average everyday people the chance to get their ideas out and to have an influence, right? To compete with some of the biggest media companies in the world just by being individual people. The gap in the market that I saw back in 2020, and it was validated in a variety of ways, which really gave me the confidence to actually go after this and see if there was a market opportunity to build here, was that in the audio space in particular, there was not the type of YouTube algorithmic discovery that exists. There was not an algorithm that would take a piece of content via audio and show it to people, give it impressions, give it a click-through rate, and then allow people to consume that content and then engage with that content. There is Spotify. Spotify has become better at this, but primarily Spotify was rooted in music discovery. And the reason why Spotify has, not really been profitable, because their entire business has been based on subscription fees that they give back to the record labels. In terms of podcasts, they kind of bought Joe Rogan, they bought Call Her Daddy, they bought a lot of exclusive content to build up their network. It wasn't really average people getting a chance to get in front of the homepage on Spotify, versus like people on YouTube that can just post a video and get discovered immediately. And so that was the thesis. The thesis was like, okay, not only am I in love with content and content discovery, and I've been making content for a long time unsuccessfully. I've been making content since like 2010. I haven't been the most successful content creator. And really in the past couple of years, I got an understanding of what it takes to really create content at a high level. But if you could build a platform that had network effects embedded with how content will get discovered in a medium that is thriving when it comes to audio, but a medium that does not have the discovery or distribution that is necessary for it to thrive, how big could that platform become? And that was the that was the mission, and that was the ultimate goal of the product when I created it. We went through a stage of about asking 1,000 people, and I'm not lying here, literally 1,000 people got on FaceTime, Zoom calls, all this stuff, all throughout late 2020 up until mid 2021. I still have a testimonial sheet in my Google Docs of 1,600 testimonials of people just like talking about what they think about the concept of Audia. How did I get those 1,600 testimonials? I sent like 60,000 emails hand by hand across 5 different Gmail accounts to random podcast emails I scraped from the internet. And I just started asking people like, hey, here's this random idea. What do you think? And a lot of people were like, fuck off. But 1,600 people were like, oh, this is a really good idea. And so I just have paragraphs and paragraphs of testimonials, got on a ton of Zoom calls with these people, basically saying, hey, if we built this product, would you use it? And, you know, unequivocally, it was almost 97% of people were like, dude, if you built this, this would solve a lot of our needs, a lot of our concerns, yada, yada, yada. And so market demand, market penetration, I was like, I think there's an opportunity here. I want to explore it. And I started this thing basically when I was 23 years old. And then we went on the journey to start building it. And we kept going from there. Went to end up, got a co-founder by late 2020, built an MVP by April 2021, then started the process of raising money once we got 1,000 users on that product. And raising money got rejected for 9 months. I met with all the biggest Silicon Valley tech firms, met with General Catalyst, met with Mayfield Fund, met with Grayscale in New York, met with a lot of these guys. And although they were really excited, which is why I got the meeting to meet with them in the first place, they ended up not investing. And so from there, you're kind of left with, all right, how do I end up raising the money? And that's when I started meeting angel investors, people that were, you know, did not have $100 million in their war chest, but they did have, you know, $10 million, and they're willing to put in 25,000 or 5,000 on an idea. And so that's how we ended up raising the money back in July of 2022. A lot of angel investors came together. I went through like 500 different pitch meetings, and people ultimately decided it was a good idea. Have you read the Mom Testament? Yeah. No, interestingly enough, my mom, you know, she understood the idea barely, right? So it was more so asking the actual market versus asking my mom, because my mom didn't even know what the hell I was building. And from the actual market, you know, I thought there was enough demand for the product and enough validity in the idea. Now, why did the idea fail? Ultimately, why did we decide to shut down? We started in April of 2021, shut down December of 2023. There was a day in December. That day was, I think, probably like December 15th, about mid-December, where I stayed up for about 17 hours. I stayed up from like 6 p.m. until 8 a.m. And then I did, you know, the market open. So I did the market open that day off, absolutely no sleep. And for those 16, 17 hours, all I was doing was thinking about product market fit. And something happened that night where I was really starting to question the broader scheme. And maybe it's because we were going into 2024. And I was like, you know what, we're starting fresh. It's a new year. Do I really think we have the potential to be able to scale and build this out to be, you know, successful? And it dawned on me that we're not finding product market fit, and we're not finding product market fit for a reason. And there's kind of 3 core reasons that I isolated that I'll get into. But before I get into those reasons, that inability to find product market fit led to the ultimate decision that became unemotional. I am not sad or crying about this. Obviously, it's been an emotional journey, but business is black or white at some level, right? Like either it goes up or it goes down. The stock either gets to your price target or it doesn't. You either sell or you either buy. And with startups, I think it's the same. You either find product market fit or you die. It's that simple. Amit announcing his startup is over and then the market tanks. Is the market really tanking right now? S&P's at 477. The market's tanking. Well, Bitcoin's down a little bit. Yeah, some of these stocks are down. Oh, well, I'm sorry, guys. We had to make the announcement. I'm sorry. And so you either find product market fit or you don't find product market fit, right? And so if you don't find product market fit, you have to make a decision. Am I going to continue wasting investor capital at the attempt to find product market fit if I don't believe I can find product market fit anymore? Or am I going to give some of the money back? Most startups, you know, they lose all of investor capital because it's a lottery bet. Like at the end of the day, and I think in the future, I will take a chance on, you know, on startups. And even if I can only put in 5 or 10 grand, I want to invest in startups. And I will know that, look, this 5 or 10 grand, it's probably not going to come back. It's 99.9% of startups. They don't return that money because it's really fucking hard trying to compete against some of the biggest tech companies in the world. So when I came to the conclusion, and I'll talk about how I came to that conclusion in a second, but when I came to the conclusion that we are not going to find product market fit, or the probability of finding product market fit is it's getting to the point where I think it's impossible. And as a CEO of the company for the past 2 years, I never felt it was impossible. I always felt it was hard. Like I wouldn't have started Audia if I thought it was impossible, right? Obviously it's difficult. Like the nature of being ambitious is that you say, okay, it's difficult, but fuck it. Let's try it. Let's see what happens. That day in December, I genuinely felt like it was impossible. And I think when that happens, when you lose the possibility of success as a CEO or as a founder, and hopefully this is valuable to anyone building anything, that's when it's time to pivot. And pivot either into a whole new idea, which we did explore, and ultimately we came to the decision that that's probably not going to work either, or you shut down and you move on. And so when I say it's unemotional for me, it became very black or white that night. Like that night, I've had a lot of relief because I was just like, if this isn't working, I'm not going to keep wasting people's money or my time if I believe it's not working anymore. And I'll talk about the conclusion for why I came to it's not working and all the honestly crazy shit you guys are not going to believe that we did that still didn't work, which led me to the conclusion that it's not working. But once you make that decision, then you have to move on. And once you make that decision, I think at that point, it's like, it's inevitable that either you're in it or you're not, but you need to do the most ethically responsible thing. And the ethically responsible thing is not to be like, all right, well, I'm just going to go on a joyride for the next year and waste all this capital I have and go, this MacBook, this AirPod, these iPad, I didn't buy that with investor capital. I spent my own money to buy this stuff, even after I knew that all deal was over, right? And I know a lot of people in my situation could have easily justified buying this MacBook and be like, oh, I bought it for business purposes with investor. It's like, no, like at some level, I have a much more ethical foundation to how I think about people's money. And I was so damn grateful that we were able to raise money, which is why I didn't take a salary for the past 2 years. I lived at home. I didn't have to pay rent. So I was like, you know what? I don't need a salary. I can survive without it. And that's why I decided to give the money back. So that is what the conclusion that I came to in December was. It's like, it's the most ethical thing to give that money back at the end of the day. Or option 3, you ape into spreads with investor capital. That is also an option, which, by the way, when I told Chris about this, Chris was like, you know what? Why don't you just ask the investors to keep the money and like just put it into options? I was like, oh my God, Chris, we can't do this. Chris was like, dude, just keep my money and just go throw it into some stocks. I was like, no, Chris, we can't do that. We got to give the money back. So there we go. That is the decision that we made. Now I want to talk about why. Okay. So now I want to talk about why we ultimately made the decision and how it's happening as well. Okay. So let's talk about the actual reasons why we shut it down. There's 3 kind of core conclusions I came to, and I want to get your guys' opinions on this as well. And that'll be the main reasoning for why we're shutting down. Number 1, the consumer's attention is harder than ever to be able to grapple onto a new product. And this is why also it becomes unemotional. Now that I've shut it down and you take a step back and you can look from an objective standpoint, which is what happened that day in December. The idea that we would take millions of people off of Instagram, TikTok, Facebook, Spotify, YouTube, think of every other social network that has your attention right now, Twitter, Reddit, etc., and bring them onto a new platform that is technologically just not as good as the other platforms, right? The apps, when you compare our app to those apps, it's like, it's night and day. There's no chance. And then also the level of content on those platforms in comparison to the level of content on the other platforms, you start to recognize, wait a second, this was actually much harder than we thought. Was it impossible? No, because there have been networks that have been able to get attention away from those platforms. But it has given me a much deeper respect. It's why I think $44 billion for Twitter is cheap. The ability to build a network effect internally on your own platform is almost impossible. It's not impossible, but it's almost impossible, right? And the reason for that is because these networks were built back in 2010. That's when Silicon Valley networks really started happening, right? Facebook, Twitter, even Amazon to an extent right now. If you try to build an e-com network with network effects, it's a lot different. Like these networks were built about 15, 20 years ago, and they started maturing 10 years ago, and they started scaling 5 years ago, right? YouTube in 2014 is not YouTube in 2023, right? YouTube in 2014, I don't even think they had close to 1 billion users. Right now, they have 2.3 billion every single day that come back to the platform. These networks have scaled at an unprecedented rate. And so when I think, and I think this also influences the investing in the stock market, right? When I think of a company like YouTube and how many billions of people are used to using it every day, it really starts to dawn on you, why would they come to another platform, right? As you said, TikTok is special, right? TikTok is a very unique platform in terms of how they have allocated video attention and short form video. Why would people on TikTok leave, right? And my original thesis, and the flaw in the thesis 3 years ago, was the reason they would leave is because they want discovery on a new platform because the bigger platforms are crowded. The flaw in that thesis was that even though the bigger platforms are crowded, the reason they're crowded is because they're valuable. And so it might be harder to get discovered on a TikTok or a YouTube, but the chance of getting discovered exists. Why? Because there's billions of people that might see your shit. Whereas on a new platform, not only do you have to get the creator to feel that there's content that they can get discovered, you have to get the consumer that's actually willing to discover it. And that right there, that symbiotic relationship between the creator and the consumer effectively engaging in a way that would create the billions of dollars of value that these networks create, I was not able to execute to be able to create that network effect on Audia. And that is when I realized in December, wait a second, do I think reasonably in the next 2 years with the $170,000 we have left, I'm going to be able to do it? Probably not. And when that conclusion that when it came to in December, it was very black or white for me. It was like, all right, it's not happening. Got to move on. And if it's not happening, you got to move on, and you have to really really, 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 you have to understand how to exit at this point, because at that point, if I've come to that conclusion, I have a couple more reasons for why we shut down as well. Then I'm just living a fantasy of being a tech startup founder without actually believing that there's something that can work, right? And if you're living this random fantasy as a tech startup founder, that's no way to live, right? Like, you've got to be executing at a goal, at a mission. I'm 26 years old. I'm trying to, do big things in life and really build stuff. And this is one of those things that failed massively. And, it's kind of one of those things where if it fails massively, and what I mean by massively, I mean, it was a big idea that failed. It's kind of like failing forward, right? It's kind of like, well, I tried something really big and it failed. What's the next thing that I can do? And that next thing doesn't have to be bigger than the previous thing, but do I get so many resources and knowledge and experience from this thing that failed that was big, that when I go to the next thing, whatever I do, there's going to be the lessons that are actually attached to it, so that there's a broader chance for success, because business success is so hard to find. And so from that perspective, it just made a lot of sense to let's give back 50% of the investment. If someone gave $5,000, they get $2,500 back. And let's also recognize that you have to be humble enough to realize you're probably not going to beat the YouTubes and Spotifys of the world. Remember, Spotify would be nothing today unless unless the record labels gave them the music. And what Daniel Ek had to do as a founder at a time where there was no music search engine to establish a music search engine and get those record labels to agree was a lot, right? And he was the first to do it, and that's why Spotify is the way that it is. It has given me a deeper respect of investing, of learning how to invest in broader networks that exist, like a Spotify, a Google, etc., because their moats are so unbelievably deep that anyone, including a guy like me that tries to really go against these companies and really build something against, like same thing with Threads and Twitter, right? The only reason Threads has even a chance of going to be at Twitter is because Instagram is pumping Threads every single day in front of 2 billion people. That's why they're getting users, right? Otherwise, what's the reason to leave? You've already got Twitter. There is nothing different from the platforms. And so it's just incredibly difficult to build a network. It's incredibly difficult to build a network effect. And the networks that we currently have are so ingrained because they were established 20 years ago, Spotify starting in 2006, and they've slowly matured over time to reach the scale of billions and billions of users, that trying to imagine those networks are going to fall apart like a WhatsApp, like a Facebook, like an Instagram, like a Twitter is incorrect, right? It's likely not going to happen. And so from that reason, that was ultimately the way that we decided to change. Rumble and Kick are really good examples. Rumble, you got to remember, Rumble got investments at a time where YouTube was censoring a lot of right-wing creators, and still are, right? So that was Rumble's unique angle. And even then, dude, I've looked at Rumble's numbers. Long-term growth on Rumble, I don't know if it's going to happen. I don't want to say anything, but if you look at Rumble's numbers compared to YouTube, like YouTube does what Rumble does in a month in like 10 minutes. It's night and day, right? Because it's just really hard to get people off of YouTube. It's really difficult. And then Kick is owned by an Australian gambling company called Stake. And they make like billions of dollars a year. So they're using Kick, which is a Twitch competitor, at a loss. The Twitch CEO came out yesterday and said, we're not profitable. Twitch has been around for almost like 15 years now, and they're not profitable. So it's really hard to imagine a startup could be profitable and growing in a reasonable way in the content space when some of the biggest content platforms in the world just aren't growing either. So, that's one of the reasons there. Now, a couple of other reasons. Number two, AI is something that kind of threw us off. When we started Audia, there was no ChatGPT. So there was no, large language models weren't really a thing in the consumer space. Now, given that ChatGPT has gone mainstream and we don't have the technical development to be able to establish massive levels of AI based recommendation algorithms or search on our platform, if a consumer does not have a certain user experience on a platform, they simply will not use it. It is becoming very evident to me, not only in how I use products, but in how everyone uses these products. If you don't have, particular types of search methodologies or LLMs incorporated into the very nature of your product, or just like the speed and efficacy of what AI brings, you're not going to win, right? It's just that it is black or white. And so that is why all these companies have been racing to be able to adopt AI into their platforms, whether it's Amazon or Google or a Microsoft with Copilot, because now consumers are expecting that. And if consumers are expecting that, they're not going to get it. And if they're expecting that and they don't get it, they're just not going to use the product. So it also dawned on me like, yo, we don't have an AI strategy. We don't have an AI infrastructure. We don't have an AI team. And the audacity that people would use our product, even if we did a really good job marketing and bringing them into the platform, over some of these other products that are fundamentally AI oriented, it's just, It's not going to happen. It's just not going to happen. And if that's not going to happen, then it's going to be really, really hard to justify that, that these companies should, that consumers should take a chance on us, because it's just not going to happen. So that is also another easy conclusion I had, that like, look, if we don't have an AI moat, it's going to be really hard to compete with some of the other AI companies that exist as well. I'll get to the questions in the chat in a second. I just want to finish the final thing. Okay. Last thing I'll say for why we ultimately decided to shut down is user retention. So we tried a lot of different strategies to be able to bring people onto the platform, a lot of different distributed strategies. In fact, the picture I'm about to show you guys, you're probably not going to believe, but hopefully it speaks a little bit to how much we worked in terms of trying to get the job done. At one point, this was my basement. We had 100 phones glued to the wall with 3 different social media accounts attached to each phone. You guys can see all the wires below them. And I was posting almost 600 videos a day. After the market opened, I would go downstairs in my basement for 8 hours, stand on my feet, and manually post hundreds and hundreds of videos every single day, all about Audia across a variety of different social channels. Basically, we created a bot farm in my basement, and to bring traffic to the platform. I mean, it got to the point where we were just like, yo, how do we do this in a way that's so weird and is scaling? And we're not the first ones to do this. I mean, I've seen a lot of other companies kind of use the strategy of having a lot of different accounts. I think we were the first ones to do it in my basement. A lot of people more do it kind of in a distributed nature. And we did it, right? And it was working. That was the funny thing. It was actually working. We were getting tons of users every single day coming to the platform because we just had our own internal form of advertising without having to pay for the money to advertise. Because usually, if you pay for advertising, it sucks. But if you're able to post organic content on your own, there's a broader chance that the algorithms are going to be more friendly to it and consumers are going to see it. So that's what we did. And people started coming to the platform. The problem was, and this was the big reason in December where I was like, all right, I think it's time to quit. Our retention was just horrible, right? People, like, how this market opened, we average, I think, 800 people every day, sometimes 850, sometimes 700. We had 900 yesterday. Let's just say 800 people every morning come. This market open stream has pretty decent retention, right? Like we've established something where there is a decent amount of product market fit in terms of daily retention on this stream. In terms of Audia, dude, our retention was like, people would sign up and maybe they would come back next week, right? They would use it for like a day and then they would leave. And so it really started begging the question, which is like, well, wait a second. If people are signing up, they want to use the product when they figure out what it is, and they're leaving, they're sending emails like, oh, this is so cool, right? All this stuff, but they're not coming back. There is a structural problem either with the idea or the product itself that is not facilitating the engagement from users that you would want to come back. Like, look, if you're doing a market open every day and 5 people show up, you kind of suck at doing a market open, right? It's not the YouTube algorithm, because YouTube will, maybe YouTube's not showing you to everybody on YouTube, but they're showing you to some people, and people just aren't clicking, dude. If your video is not getting views, people don't want to fucking click on your video. It's just that simple, right? Like at some point, you can't blame everybody else. You have to blame yourself. And so, if people aren't coming back to the product, it's not people's fault. It's the product's fault. The product is not compelling enough to get them to come back. Every phone has Kelly's pick on it. We had the amount of shit I had to go through to sign up with an Apple ID on every phone so that like I could download apps. Like it was maybe that's another story for another day. Like the shit I had to do to get that to work, but I figured it out. It all synced to my photos, so every phone did indeed have Kelly's picture on it. But in general, there was a lot of shit that was going on, right? So and that strategy also did not work, because if the retention wasn't there, even if you were bringing a ton of distribution, if people aren't staying with retention, then there's also no reason to stay. Wait, you used iPhones? Yes, we used iPhones. Now, funny thing, I thought, Androids. Let me use Androids because Androids are cheap and easier and all this stuff. I used $80 Androids and they were so god awful that we had to return the Androids, and we got $115 iPhones that were easier. It's another $40, but the experience we had on the iPhone versus the Android was just night and day. And it was a 2020 version of the Android or the iPhone. So the iPhone was actually older, but it was still working really well. So this was the basement, and this was the last attempt. This was the last 2 months of like, look, let's like really see, can we do something that's different and see if it works, because every startup, you know, has to do really, really crazy different things. Bitcoin, by the way, below 44,676. Okay, Bitcoin is crashing right now. And the, you know, I guess this story, Bitcoin did not like my story. Palantir also fell below 17. I'm sorry, guys. I said I would make the announcement. I didn't know it crashed the markets, but we had to do it. That's a lot of fraudulent Yahoo email addresses. Actually, it was Gmail, and we got a dude in India to come up with addresses that are not fraudulent. So Gmail didn't cancel any of our Gmails. Dude, the shit we had to do, like, I think I'm going to start late night stock talks on like Saturday or like one of these days during the week now. And so during these late night stock talks, we will discuss all the crazy shit that went into building that apparatus. And, you know, we'll talk more about it. But those are the three reasons, right? So we didn't have enough consumer retention. We did not have an AI strategy. And the consumer's attention to be taken away from the larger platforms, to me became close to impossible, right? And that's why it was very, very difficult to make audio work. Now, this comment right here from Honeybee, your talent is journalism. This is another thing I thought about towards the end of 2024. At the end of the day, and I think all of you in the chat, the 518 people that are still here listening to me, thank you from the bottom of my heart for listening to this entire thing. I really appreciate it. And I'm humbled that you guys care enough to listen about it. I think I also came to the conclusion that I have a calling, and that calling is content. And, you know, the reason that calling is content, I think there's a lot of reasons, but the number one reason is because there is a certain level of energy I have for life in general. And I think you guys see it on the market open. I'm not the smartest investor in the world, right? I'm not the, you know, I'm not Warren Buffett, but there's a reason people come back to the show. And the reason people come back is because, like anything with content, it's about energy, and it's about the feeling you get, and it's about the emotions you have, and it's about the experience you get with someone, even if you disagree with them politically or you disagree with them on their investing style. It's you know, I don't agree with Andrew Ross Sorkin about everything, but I like listening to him in the morning. And so I kind of came to the conclusion that given my communication skills and my ability to attract an audience and my fervor for life and the excitement I have every morning to say, you know, let's start off the day and let's get into everything. And my willingness to learn about the macroeconomy and cryptocurrencies. And like, I get excited to understand arguments going back and forth. And like, what does it mean? And how do we put this together? And how do we make it sound exciting for the consumer, right? Like my entire life, again, I did debate in high school. I was a national public speaking champion. I was ranked internationally. The whole premise of debate was, can you take an argument and then communicate it? And what is the stock market? What is the macroeconomy? What is politics? All of it is just looking at arguments and then putting them together. And then do you have the willingness to communicate those arguments in an exciting way that gets people to listen and actually care about your presentation of the arguments, even if they don't like your opinion of the arguments? And I think over the past couple months, I've really come to the conclusion that if I'm going to be successful in business, my success is not going to come from starting some tech startup. My success is going to come from building a brand that is rooted in my ability to leverage content as the gateway portal to then sell anything that I want to sell, right? Whether it's a $5 a month subscription to something, or whether it's you know, physical cowbells, whatever it may be. Like that is where my business success lies. And hopefully also in investing as well. And we'll see, you know, last year was good. We'll see how this year goes, because I'm just learning a lot more about investing. But it doesn't lie in trying to build the next Facebook. At least not yet. You know, maybe 10 years from now, when I'm much wiser and I have a much bigger brand, much more opportunities, we'll go for the startup dream again. But as of now, I have no intentions to try to start another, you know, venture-backed startup, because that's not where my talents are. My talents are content. And you know, it's really interesting. I was having dinner with a friend of mine who is in the startup space as well, and he's an engineer. And we were in New York a couple of weeks ago, and we were talking about it as well. And he was telling me the same thing. Like, he's a 10x engineer. Like, this guy's one of the smartest engineers in the world, in my opinion. And we were just talking about like competitive moats of individual people. Like, what is your moat as a human being? And, you know, one of the things that he was saying is like, look, at the end of the day, you know, maybe Audia isn't the moat in regards to tech startups, but one of your moats is content, because you just have an understanding of content that, you know, a lot of people don't have. And, you know, the numbers are starting to prove that if you can keep going on this trajectory, maybe you can really grow to become really, really big, right? And, you know, we're not big yet, but there is a sign of product market fit when it comes to content, whether it's on Twitter, whether it's on YouTube. There is a unique sign of product market fit that has been developed over the past 2 years. And there is a market that is willing to consume the product of Amit's content. That is something I think I need to go all in on. Now, I don't really know what that means, right? If people are like, what are your plans after Audia? I don't really have a lot of crazy plans. My plans are, let's just keep doing content and see what happens, right? Like this is really developing. This happened in the past 2 weeks, so I'm trying to figure everything out. But it became clear to me in December that like it's very obvious that if Audia is not working and there's no chance we're going to get the consumer off of these tech platforms and use our platform, then what is working? And from a life perspective, what is working for me ends up being content. And that's how we came to the conclusion. Sethi Ross says the crazy thing is you don't even use clickbait, thumbnails, and titles, yet you get this audience. This is really proving of your talent. Yeah, like that's the other thing about, you know, like what's the title of this market open? Banks kick off earnings, Palantir new deal, PPI inflation shows good data. And 30 minutes ago we had 850 people here. And that's another, like it dawned on me, like at some point people are clicking because they just want to consume the content. They don't need like, oh my goodness, like Elon Musk farted. Like they don't need that, to click on a video if they actually enjoy the content. And the fun thing is, we are not even at 1/10 of what I think my brand could become. What is my brand? If I had to dial it down, I think my brand is financial journalist within financial media. That's it. And does that mean that you're the best investor in the world? No. But does that mean you have the on-air energy and the passion and excitement? This is a really important thing, to take things that are happening in the financial world and then communicate them in a way that gets people excited. The answer to that question, I think, is yes. If I was doing this in politics, it wouldn't be the same, right? Because I like politics, but I don't care that much about Ron DeSantis and Nikki Haley. Like I like talking about it, but it's not something I'm going to wake up I'm not a Ben Shapiro where I'm going to wake up every morning and I'm going to, talk about the poll numbers with Ron DeSantis. Like I don't care enough about that. But PPI data, CPI, shit. You better, like 8:20 a.m. I am ready to talk about CPI. I'm ready to talk about, shelter and energy, because like that stuff's exciting to me. Why is it exciting? I don't even know, dude. Like I'm trying to psychoanalyze myself. I've always been excited about money. Like when I was little, my mom used to see how I would like take my cash, my $300, and I would like stack it in a certain way. I would never spend it. I would put it in the drawer. Like I was always like really like cheap in terms of I didn't want to buy stupid stuff. Like, so I guess I've always been passionate about money, but as I've gotten older, the stock market has just become so interesting to me. And it's become a passion of mine. So that is how we came to the conclusion. I'm going to answer a lot of questions now. So put your questions in the chat. I know there's a bunch of questions I have to go through, but overall, I just want to say thank you to everyone who has supported on this journey, especially to our investors. Again, it's the most humbling experience when literally every single investor was like, "Hey, keep me in mind for your next idea." Like. It was just like when they said that, you just want to cry because you're like, dude, I just lost 50% of your money. And you're like, hey, just like, and they were vehement. They were like, do not forget me on the next idea. And I think it's just one of those things where it's like, you desperately want to give these people a return. You weren't able to do it this time, but the fact that they're still willing to bet on you just means a lot. And so that, along with the fact that I think Audia wasn't going to win, or I knew Audia wasn't going to win by December. And I realized that my strengths ultimately lie in journalism and content. And if I went all in on that, how big could that become, right? We're at what, 20,000 YouTube subscribers, 24,000 Twitter followers. If I really went all in, like actually dedicated the next 2-3 years to just that, could that be hundreds of thousands of people that care about you as a person because of your communication style? And how big could that go? I don't know. But I think that's something more that I'm willing to explore now that this is done. Okay, let's get into questions. We got a bunch of good questions. Benny says, Amit, do you think you would have started Audia if you knew you would have been this successful on YouTube? What's really interesting about this question, I've thought about it many times, is that I would not have started YouTube if I didn't have Audia. And that is the really hard thing I have to grapple with, which is like logically, let's be black or white. If you knew you were going to fail at something, you wouldn't have raised the money for it. You wouldn't have, gone through this whole process, even though I'll talk about what this journey has done from a learning perspective in a little bit as well. And you would have just done the thing you're successful at, which is YouTube. Number one, that's not how life works, right? Like if everyone knew what the successful path is, everyone would just be successful. You kind of got to go through a lot of fucking shit until you find something that works. That's the first thing. And number two is the only reason I started YouTube was to talk about my startup. But while I started talking about my startup, I realized like, hey, I've been watching Meet Kevin since like 2017, dude. I've cared about the stock market for a long time. So when I started my YouTube channel, I was like, okay, I'm going to talk about my startup, but I also want to talk about stuff that like interests me. And so like maybe I can develop an audience talking about stocks, and then startups are kind of related to stocks, right? Because business. So the original name of the channel, guys, was The Daily Business Show. Only the OGs will remember. The name of the channel was The Daily Business Show. Only like a noob could have thought of that as the name of the show, but that's what it made. So I was like, oh, it's all related and it'll all make sense. And so the only reason I began YouTube, it had nothing to do with like really trying to become like a Meet Kevin 2.0. It had everything to do with, well, if I talk about business, then my startup can get more awareness. And, 3 years later, I realized I'm more of a content creator than I am a tech startup founder. And the harsh reality is, if you come to that conclusion, then you got to make the decision of where to go. And the decision has been made now in terms of where to go. Honest Chill says, I remember that. All right, Honest Chill, you've been here since the beginning. I love it. Okay, what happened to Tristan? Tristan was one of our original videographers. He left in the summer. So the other thing about Tristan that was really interesting, I hired a full-time videographer to help me to be able to make content and like do what we need to do for marketing. Tristan also got commoditized, guys. I mean, AI, if you're paying someone for videography, like you're wasting your money at this point. The reason you're wasting your money is because there are too many tools that are out there that can do video editing at 1/100th of the cost. And so for those that are wondering, what is the implication of AI? You are seeing real-time data from someone who had a startup and was paying someone and realized that I cannot be paying this person if the computer can do, first of all, not only just like a better job, but they can do it 55 times faster. Why would you pay someone to edit a video when the computer can do it in 10 seconds? And when I mean it can do it in 10 seconds, I'm using software today that's doing it in 10 seconds. So that's another, aspect in terms of just how AI is orienting itself, that there's a whole different world that's going on as well. Dookie says, so Aldia is dead. Yes. The website is still live. Eventually it'll be coming down in the next coming months. But I am in the process of returning investor capital. There's a couple of legal things we need to do just in terms of shutting down the actual C Corp. But I can guarantee that every investor is getting 50% of their capital back. And that is something that, and a little bit more as well. We might be able to liquidate some assets and they might be able to get like 54% of their capital back. But that is the guarantee that I gave all investors over the past week. And I told investors before I told YouTube, obviously, I wanted to make sure they knew. But yeah, that is there. Thomas says, where would you define yourself on the political spectrum and does it affect your investing strategy? I'm becoming more center. I think I was much more left when I was younger, becoming much more center now. Definitely affects my investing strategy. It would be hard to vote for Bernie Sanders or Elizabeth Warren for president. Whereas in 2015, when I was in high school, I would have voted for them in a second. So obviously things have changed in regards to my political beliefs. Let me get some other questions. Okay. What questions do we have? I'm just going through the ones that are higher. Did you consider hiring some computer science college students as interns and see if they can come up with some AI solutions and offer them equity? It's a good idea. I didn't think of that, nor did we want to pursue that, because when I'm saying AI is not integrated into the product, what I mean is that, dude, some college interns are not going to be able to like really beef up the product with the most sophisticated understandings of AI. Like my argument is, it is so difficult to compete with some of the bigger names that are in the industry in regards to their AI moat. Even a company like YouTube, even like Spotify now, you upload a podcast to Spotify, they're transcribing it into 100 different languages via AI. There's no way we could have done that, and we're an audio company. We technically should be able to do that. Why? Because if you could listen to one podcast in 15 different languages, then people are going to listen to the podcast they like in that language on the platform that's doing it for them. If Aldia can't do that, then boom, you don't have a moat, right? You can't compete, at least on that premise. And that's one feature out of dozens of features. So it became very obvious to me that we were just not going to be able to compete. And if we were not going to be able to compete, then we have to do something else. Do what Chris said with the rest of the money, dude. Chris was so funny when I called him. I told him about it. First of all, Chris was just like, yeah, this is the right decision. Chris was like immediate. I told him in 2 seconds. Chris was like, dude, like you don't even have to keep explaining yourself. Just like you need to go all in on content. You need to like move on from this. It's okay. Like shit happens. Move on. And then he was like, you know what Warren Buffett did? In 1950, Warren Buffett raised a lot of money to start a sewing company. The sewing company failed, and then he told the investors that he was going to take that money and use it as seed capital to start Berkshire Hathaway. And he was like, I think you need to do the same thing, Amit. And I was like, Chris, are you saying I'm the next Warren Buffett? And he's like, I'm not saying you're the next Warren Buffett, but you could be the next Warren Buffett. I'm like, Chris, we're not fucking doing this, dude. Like, I do not think I'm the next Warren Buffett by any sense of the imagination. And I'm definitely not managing people's money at 26 years old, at least from a a capital allocation perspective. But startup is different, right? There's a whole different philosophy to managing people's money when you're young and doing a startup. In fact, when you're young, that's when they want to give you the money because you have the most energy to. But when you're managing people's capital, no, dude, we're not fucking doing that shit, dude. Like these stocks fall, I'm not gonna be able to sleep at night knowing that people's money is in these. So I can sleep at night with my money falling. I'm not sleeping at night with other people's money falling. So Chris was very optimistic about the decision, and he wanted to go a totally different direction. But I was like, no, Chris, we're not gonna do that. I thought I was gonna be making money this week in the stock market. Instead, I'm learning about life from a bit. Laura, I appreciate you. I know you've been part of the channel for a while. Look, you know, the other thing about this, and I'm going to be talking about this a lot more as we do like more live streams, just, you know, me and the channel one-on-one, not like stock related live streams, because I'm going to start a lot more of those. The experience with Audia has been one of the greatest experiences with my life. And the reason for that is because most people, when they're 22, they get into a job and, you know, they become an employee. And when I was in college, I always knew I wanted to be an entrepreneur. I always knew I wanted to do something on my own. And I tried a lot of businesses in college. I failed at a lot of businesses. I actually did start one that was fairly successful. We did about 100,000 in revenue over the course of 4 years, which for a college student was really good. And so, you know, I had a taste of success, and I had enough of success that business that I started carried into post-college. So I never needed to get a job. Like I've never had a real job. I never worked a 9 to 5. I've always made money. I've been paying 15.3% fucking self-unemployment tax for like 7 years now. Okay. So so from that perspective, I've never had a job. I've always been on my own, and I've always had the courage and optimism that I could do it on my own. In 2020, when I graduated, my first thought was, yo, I'm 22. I want to swing for the fences. I don't want to be stuck at JP Morgan Chase. I want to actually go on a chase for my dreams. Right. Someone also asked in the chat, there was a question about 20 minutes ago, how do you come up with these dad jokes? It's in my soul, right? And that's another reason I need to become a content creator. So Chase, JP Morgan Chase, you got it. Okay. Anyway, so at 22, I was just like, you know, I want to go on a really crazy journey, and I want to go for the fences. And that's when I got the idea for Audia. And I'll talk. I don't want to go super into how I got the idea, but I got the idea from a lot of different experiences. I've been thinking about this since 2018, quite frankly. And then in 2020, I really came up with the idea. And then I was like, all right, let's fucking start a startup. I had no idea how to start a startup. I had no idea how to raise money. I had no idea how to recruit a co-founder. I had no idea how to do product management. But in the 3 years that I've been building Audia, I've been the CEO, the product manager, the CMO, the CFO, you know, the PR officer. Like I've done everything in regards to building this startup. And I think that experience is simply more valuable than becoming, you know, a junior analyst at some bank at 22 until 26. Instead, from 22 to 26, you say, let's take on the world. And the naivete at 22 to say, I want to take on the world, likely is going to result in you not beating the world, but it's going to put so much experience and knowledge in you trying to take on the world that the next thing you do has a much higher probability of becoming successful on your own as an independent entrepreneur, because you've learned so much from trying to swing for the fences. And I think that's kind of how my life story in my early 20s are wrapping up to be. And that's kind of how I think about the experience over the past 3 years. You would have been so rich at JP Morgan though. No, you wouldn't have, dude. All my friends got that job. It's $95,000 and then you got to pay, you know, 30% in taxes. Like in New Jersey, maybe in Alabama or Florida with no state income tax. But in New Jersey, the people that are working at JP Morgan are not making it. The other thing, here's another reason, you know, I have a lot of friends. Okay. I have a lot of friends, and those friends ended up going into banking, product management, all this shit. Right. And a lot of those friends, they called me in 2020 and 2021, and they explicitly said they want to do bad things to themselves, if you get my drift. And it was interesting to hear that, because I kind of knew that was going to be the life. You know, I'm not saying that everyone experienced it, but a lot of the experiences of just being stuck in a corporation and feeling like you're getting the life sucked out of you, even if you're making good money, but then you're paying it off for this fancy apartment in Washington, D.C., right? Because now you have to pay rent, which is one of my friends. Like it's soul crushing. And for the past 3 years, although I was unsuccessful at Audia, I have lived every day to the fullest. I mean, every day I woke up, it was like, let's take on the fucking world, dude. Let's go for it. And that level of excitement and energy, I mean, I get to wake up in the morning. There's 800 people here ready to consume my thoughts and ideas like that. It's just, it's more than I could have ever asked for in terms of gratitude, right? Like, you guys know how much I like being on stage, given I did debate in high school, and now I get a stage every day to be able to speak my opinions. And look, I worked my ass off for this. I mean, look, in 2021, when I started, I was posting 4 videos a day. I was really hustling. I was doing, now I'm still hustling, but now I have a little bit of a baseline, right? Whereas in 2021, literally no one in the world knows about you. You just have to just go for it. And that's what I did with content. That's what I did with the startup. The startup failed. Content has not failed so far. And so from that perspective, I think that my go-to-market approach on any idea has never been, let me go to JP Morgan. Let me get the nice salary. Let me get the safe, cushy security and feel that I'm on top of the world, even though I know that, I'm not really doing shit with my life, but I have this nice salary so I can afford this Mercedes and make people think on Instagram that I'm living a good life, which is what 99.9% of my friends in business school did. I did not want to do that. That was basically killing myself if I did that. And I'm very happy that I did not do that, because now what it's led me to is potentially a career in media that I might have a chance to become successful in. We'll see what happens. And all of the shit I had to go through to get to this point is why I'm here, not because I decided, JP Morgan's $100,000 salary would be much more valuable. John says it's not the same as 95K in Wisconsin. That is also true. You do live at home though, so that helps. I agree. Living at home also helps. And also, by the way, like I don't want to move out, dude. Like I'm like maybe in the next couple of years, but from 22, my friends that moved out at 22, dude, one of my friends had to buy, she had to get a dog. Okay. She was that unhappy. She had to get a dog. She went from New Jersey to Washington, DC. She was making $120,000 a year. I remember she FaceTimed me a couple months ago and she was literally talking about suicide. She had to get a fucking dog. Guess where she lives now? In Chicago with her parents. She moved back home. Why? Because she was fucking depressed, dude. Like, everyone thinks like there's this fantasy life of you being on your own in some apartment and living the best life. And it's like, no, dude, there are 2 avenues to happiness: family and then chasing your dreams. And if you get lucky enough to have both, which is the position I'm in, I got to chase my dreams. I still get to chase my dreams in terms of the dreams are a little different, right? But I still get to chase, and I'm subsidized by my family, meaning they don't want me to leave. They actually want me to stay. There's a lot of happiness there. And that's not everyone's situation, And so I think I'm really blessed to be in that situation. God didn't put us on this world just to work. I agree, dude. And look, and it's a really privileged thing for me to even say I get to chase my dreams. And I've been reconciling with this for a long time, because look, on some real shit, my dad wakes up every morning and he goes to work, right? 4 a.m. He's up like a champ, barely sleeps at night because he has health issues, and he goes to work every day. I wake up at 4 a.m. Part of the reasons I started waking up at 4 a.m. and getting my ass to work is because I'm like, my dad is doing manual labor every day. I get to go read the Wall Street Journal and come up with some arguments and talk about them and insert a dad joke here and there. And that's how I get to build my career. Whereas my dad is fucking working his ass off, waking up at 4. So it is very privileged for me to even say I want to have a career in media, because having a career in media is the most privileged career you can have. You literally don't have to do anything in the real world. You have to acknowledge what's going on in the real world, and your communication skills have to be strong enough to get enough people to care about your ideas and thoughts, which gives you the privilege of having a career in media. It is very difficult. It is very competitive. It's cutthroat competitive. That's why people go to CNN and Fox, right? Because if they want to do it on their own, that's why I have so much respect for Meet Kevin, because, he could be on CNBC tomorrow. I think they would hire him, but he's doing it by himself. It's really competitive, but it's also very privileged. And part of that privilege comes with an understanding that, as privileged as it is, you do have to work your ass off, because unlike a job that has a salary and you need to make sure your boss doesn't think badly of you, your job in the media is to make sure the world has some positive opinion of you to an extent. Not everyone's going to like you, but enough people need to like you versus hate you for you to develop an audience. And in order to do that, I realized this in December as well. Like, if I really want to go all the way on media, you have to be so unbelievably committed to producing media and producing content, which means, if you want to be a content creator and you're posting 1 video a week, good luck, right? Especially in the finance space. If you want to be a content creator and you're posting 3 tweets a day, good luck, right? You need to be so all in. And here's the kicker. I asked myself in December, right? This was the 2 roads I was looking at. I asked myself in December, am I more excited to be all in on chasing idea, or am I genuinely more excited to be all in? And when I mean all in, I mean I didn't sleep all week. right? Like, am I willing to go through that level of grind for establishing a career in media? And when I really thought about it, and I looked at the probability of success on Audi, and I was just like, dude, like, I outlined all the reasons. Like, this is the probability of this is incredibly low versus the probability of media, given it's still low to succeed in media. Like, media is cutthroat competitive. It's still low in terms of probability, but I have enough product market fit. I feel that I have a chance to win. The decision became really clear. It's just like, I have a better chance at this, not at this. This is definitely not going to work given the competitive ecosystem we're in with all these other major tech companies. And if I go all in on content, the one thing that I know I can win at is being me. And so far, being me has worked. And if I continue to be me at the highest of levels, maybe I can win. And make no mistake about it, if I stop posting content, that career is dead, right? That's why I'm saying it's so cutthroat competitive. That's why media is so difficult. If you stop posting, you are dead. You don't exist. The algorithms don't care. They will forget about you in 5 milliseconds, and you will be obscurely irrelevant, because no one needs to have no one has the audacity to give you the attention that you quote unquote deserve if you're not fighting for that attention by creating content at hypersonic levels every fucking day. Like, if you're doing content at an elite level, this is why I'm starting to stream multiple times a day, because you really got to go for it if you're going for it. And so, I decided that we're going to go for it. And the privilege of trying to go for it and being in this position means that we gotta really work our asses off and see if we can do it. And on top of that, there's a lot of happiness that comes with that. That's the other thing I can say, dude. The other thing, Laura, this is a great comment. I'm happy every day, right? And I'm happy every day because Kelly texts me good morning every day. But outside of that part, like, I'm happy every day because I wake up and I'm like, well, what do I have to do today? I have to figure out how to take stuff that's going on in the world and make it more understandable to people that actually care about how I communicate what's going on in the world. And you try to like reconcile that, and you're like, holy crap. Like, I'm not just doing content to make content and get followers. Like, this is more deeper than followers to me. This is like the existential nature of my soul being content with the fact that I get to wake up every day and there is a purpose to waking up, right? And this, a lot of teachers are very happy, even though they're grossly underpaid. My sister, when she was a teacher, she was happy every day because she had a purpose in teaching her students. Now she's like a VP administrator. She moved on from being a teacher after 6 years, but she was happy when she was a teacher, even though she was grossly underpaid. I am not making a lot of money. Okay. YouTube, you guys know my income on YouTube last year. It was like 30,000. Like, that's like a couple thousand a month. That is not sustainable amounts of money. Okay. For anyone who thinks we're doing YouTube for money, no, because there is no fucking money. Like, the money is barely covering expenses. Right. So I'm doing this because you have to go through some years of taking the L financially, because if you can take market share, example, who is one of the top Palantir content creators in the world, I would say I'm up there. And that is market share that is incredibly valuable, because as Palantir grows, awareness also grows. And there is a lot of opportunity in the future if you're able to be there early, but you have to eat shit while you're there, meaning you have to be there every day, no matter what, even if you don't want to. Like, that is the psychology and the business strategy I'm conceptualizing when it comes to my go-to-market over the next 5 years of establishing my name in media and actually having a career that can pay, a lot of money per year. Because if you're successful in media, you make millions, right? But to get there, you have to eat a lot of shit. And so that's where I'm at. That's where I'm at right now. And that's kind of where we are. Matt says, thanks for being there, Mitt. We appreciate you. I appreciate you, Matt. Thank you to the 430 people that are here. Me shutting down my startup definitely doesn't affect your life in one bit. So I'm just incredibly grateful that you guys are here and you're listening to this. And I think the fact that you're here and you're listening to me speak about this, it also speaks to just the bond that I've created with this audience and the connection that I have. And even though sometimes we disagree on stocks and stuff like that, I think there is a genuine bond, and that's very hard to find, dude. It's very difficult. Like, I cannot stress how cutthroat. I've failed at media for years, dude. I know what it feels like to go live and 5 people show up. I know, I've been through that. And it's not only is it heartbreaking because it means no one gives a shit about you, it's kind of like you're just not good enough to get people to even listen to you. And I always knew, I think I was good enough. It's just, you have to go through a lot of stuff to get there. And now we're here, and the fact that 430 people actually care, it just means the world to me. Community is hard to find today. Yeah, Matt. That's what I think. That's the best comment. We're building a real community, and if we're building a real community, That's just exciting. It's just exciting because that community can last, that community can be nurtured, that community can be taken care of, and that community can grow. Especially because, you know, we haven't done any FTX nonsense, or, you know, that community actually is real and authentic versus full of shit, like a lot of communities on the internet. So means a lot. It means a lot. Thank you all for the comments. I think I got most of the questions. If we have any small questions, let me know. Sonny, you are a talented communicator. Thank you so much, Sonny. I appreciate that. Honeybee says, I want you to interview Tucker Carlson. Tucker Carlson, by the way, might be with Trump for VP, because Trump said he picked his VP, and a lot of rumors are out there saying it's Tucker Carlson. If that happens, that's going to be really exciting to see what happens. But it would be awesome to interview him. You're doing an amazing job, Ahmed. Jose, thank you so much for being here as well. Golden Eagle, love your energy. I started tuning in every night to your live. Bach, thank you for being here. Yeah, it's like the people that have tuned in every day and they're continuing to tune in. That's what I mean by retention, right? People are actually coming back every day, whereas on Audiat, we just didn't have that. And if you don't have retention, you don't have a business, right? You go to work every day. That is retention for your salary. You come every day, you get paid. If you're building anything on your own, whether it's an e-commerce store, a YouTube channel, if people aren't buying every day, if people aren't watching every day, you don't have full retention. And to work for that retention is very difficult. And so everyone that comes and spends time, it just means the absolute world to me. Dr. Field says, I'm not making money as a tutor and I started this business in 2020. I'm an engineer and have not figured out marketing. However, I enjoy having the freedom of free thought. Yeah, look, I mean, to make money at something you love is very difficult to do. And if you're blessed enough to do that, and at some level I'm getting there, that's really special, because if you actually make money at what you love to do, you've kind of won the lottery of life. And just having the freedom to try is the most important thing in the world. I got a Coinbase notification. How bad is Bitcoin? How bad is Bitcoin? Where is Bitcoin at? Oh my God, 44,340. All right. I'm sorry this announcement tanked the markets, guys, but I guess the market wasn't happy that we had to shut down, because goodness gracious, this fucking market. All right. I think that's it. I think that is it. Amit, love your content. If you need some help making that short, we'll love to hook up with and work. Thank you, Gif. I appreciate that. Absolutely. Absolutely. Amit, if you do what you love, you will never work a day in your life. I agree. Sanjay says, bravo, job, Amit, mad respect, happiness, doing what you love is still the most important thing. IMT says, I agree. I just have your market open playing in the background while I work. And see, again, guys, I cannot express how grateful I am for some of these comments. Again, like when I told the investors and they basically said, fuck it, just move on. And thank you for giving us the chance. And now telling you guys, and you're all, pretty accepting of the fact that it happened and willing to listen and hear me out on how it happened. It just means the world. I can't explain anything else. It just means the world. It means a lot. And that's the other thing, Chad, shout out to my guy, Chad, in the chat, who's having we're getting another Palantir ontology series very soon from Chad. I'm really excited to see ontology augmented generation and a lot more content come from Palantir. He's on the Palantir content team. He's an engineer at Palantir. They're absolutely fucking killing it. I mean, that last article they dropped, absolutely killing it. That shirt is amazing. Thank you, Chad. I appreciate that. The other thing I talked to, ticker symbol U was one of the investors in the company as well. Alex, ticker symbol U, he invested about $4,000. And I talked to him last week as well. And he said, you know what, dude, like it is what it is. But he told me his personal experience. He's I think 30 now. He started multiple companies when he was in his early 20s. And he talked about his experience of having to shut those companies down. Like, business is ruthless is another thing I've learned. And if it's not working, like this is the beauty of American free capitalism as well. Like in America, the market decides, right? You don't decide. Your ideology doesn't decide. The market does. And if the market doesn't want the product, it's over. You move on. It's done. You got to move forward, right? And so ticker symbol U, he was basically telling me like, dude, I've started companies when I was in my 20s and I had to shut them down because they weren't working. And it's just like, sometimes they're venture-backed startups, sometimes they're little mom and shop businesses, but if it's not working, it's not working. And rather than crying about it, I think part of the American ethos, which is why people start things in America, is if I try and I fail, I won't be demonized for trying and failing, right? Whereas in other parts of the world, if you try and fail, I mean, you're looked at as like the worst thing on earth. Whereas America, which is why I will never stop fighting for these sort of American values and freedoms, and the ideas that America wants you to try really hard, because if you fail, we will be able to pick you back up because there is enough capital, there is enough investor sentiment, there's enough liquidity, there's enough people willing to hold a stock from $30 to $10 in DCA because they still believe in the companies. But there's enough people in this country in particular that are willing to reward that. That's why all the big tech companies are started in America. Silicon Valley is a thing because people will lose billions of dollars And then investors will be like, well, the next one might make $10 billion, so let's give them a chance. And, that's what exists in this country. And that's why it's super exciting to take a chance here and keep going even after you fail. And everyone is in debt. That's true. Well, that's why Bitcoin should, that's the bull case for this Bitcoin. There's $34 trillion in debt, even though we don't have that right now. But that is also true as well. Strawberry Cake says, Amit, you have great magnetism towards your watchers. Me, that even I recommended people to follow you and your friends when it comes to Palantir. I wish you the best as we cruise through this year. Thank you so much, Strawberry Cookie. It means the world to me. And that's another comment I get from a lot of people, which, I mean, dude, it was so funny. Like, someone texted me that their dad texted the group chat about a Palantir video that I did, because they both are investors in Palantir. And they were like, dude, my dad's asking me about your video because he watched your video last night and he has thought, like, it's just when you have that level of product market fit that someone's dad is texting them about the video that just came out 2 hours ago, you gotta kind of go all in on that, because that doesn't happen often. And if that is there, like, what does it look like when we're at 100,000 followers? What does it look like when we're at 200,000? What does it look like when, like, can I get to the point where I'm one of those people in finance media that, like, legitimately millions of people actually care? It's a big, audacious goal, but it's an audacious goal that doesn't seem as impossible as competing with Spotify. And I think that's the other thing. Like, that seems really hard, but it seems actually doable. Like, me saying that doesn't feel like I'm bullshitting myself. Whereas by the end of December, when I said I'm competing with Spotify and YouTube, I felt like I was bullshitting myself. I felt like, actually, no, I'm probably not. But I'm competing with CNBC. Nope. I actually think I genuinely think I can work my ass off for the next 2 years and we can get there. And so that's how we made the decision. That's how we came to it. Okay. That is it. And let's end it there. And that's it. That's it for me. Thank you, everybody, for being here. I appreciate it with me. I appreciate you guys. Cal says, same with me. Background market open and close every day while working. I know it's a video, but you're like my radio show. Yeah, that's another thing. It's basically become people's kind of background music and people are consuming. And that's also ironic because it's your radio show on YouTube and I'm building audio with audio, right? So that's another conclusion I came to. It's like, wait a second, like, people are just using YouTube in different ways. So all this stuff came together and it came to the conclusion that let's go for finance media and let's see what we can do and give the money back, because that's the other big thing that I'm happy about. We're giving some of the money back. Most of the time, people don't give the money back. They waste the money. They buy a ton of shit. Like, you're going to go the next year, buy a ton of shit and just say it's a business expense. And literally, I could never be liable for it given the contract that the investor signed. So you could really get away with it. And it's just not what I wanted to do. It's not who I am. And the most important thing when I came to this conclusion was it's time to return this capital, because this capital is not mine. It was for an idea. That idea is not working anymore. It's time to give it back. And people deserve to get their money back on that. All right. Amit, you need to listen to The Eye of the Tiger by Survivor. Okay, Sonam, I know I'm young and I know I don't watch a lot of movies, and I watched Scarface over the weekend for the first time, but I know The Eye of the Tiger. Okay. I know that song. We should be playing that song in the background. That song should be here. All right. Thank you, everybody. Puzzle says, we love you, Amit. I love you guys back. It means the world to me. I'll be back for market close. So I know this was a very long market open, but we'll be back for market close discussing everything that's going on. Keep going from there. And we'll have Palantir Weekly tonight. And the content media journey continues. And we'll keep going from there. Thank you, everybody. I appreciate you guys. It means the absolute world to me from the bottom of my heart. Thank you, 355 people, for still being here. I'll see you guys for market close. Bye, everyone. Thank you.